Good morning. You can adjust your speakers. Happy Money Monday to you. It is July 24th. We're going to be streaming stocks, options, futures trading today. Watching the SPY, watching GME, watching AMC even. Of course, barbecue. All the runners. BBIG. Sub up, like up, comment down. Happy money sticks around. Hope you had a good weekend. Hope you were able to rest. You can follow us on Twitter at HappyMoneyYT, as well as Discord. We have a link for both of those in the description. Actually, I need to put one in chat. I'll throw a Discord link in chat and I'll pin it. You guys are welcome to join there too, it's free. Renew, you are first. Well done. Yeah. Shall Renew answered it. Court judge ruled in favor of not dilution, which I think would kind of be bearish for it because they need to raise capital. However, there were a lot of people playing this this arbitrage play of AMC going down, APE going up, because they're expecting dilution, they're expecting them to converge. So potentially this is a lot of shorts that are just closing because now they don't know if or when it'll happen. APE actually rebounded really well. So AMC might do the same. I mean, it's come down almost 70% from its highs, right? Because it did almost 100% yesterday. Around 31%. We'll keep an eye on it. The options have been expensive for quite some time with all of the court catalysts coming up, so they're just going to be even that much more expensive this morning. Spreads are your friend. But we did notice a little bump up on GME from it. So still basket correlation there. We even got some cost movement from it. Actually, the lot from cost, 20%. Cost doesn't have an options. We'd have to get shares on that one. But I do like the cost trade. Kind of the sleeper of the basket. Does have an RSI divergence here and an inverse head and shoulders building. That's kind of cool. Now you can trade on the chart. I've actually been wanting to do this. I didn't know that Webull didn't have this. We've got Tupperware up 40% pre-market also. Tupperware costs. Let's get my voice. I'm like fighting sickness the last few days, so not the best voice. Cherry Dog's not looking at AMC run. We'll see what happens to AMC once it opens up. I mean, it could still definitely rally. I don't know. Barbecue, I don't think we'll just dump unless you get another filing where we're anticipating some awesome path forward out of Chapter 11, and they just reiterate shareholders have no value. Without that, I don't think you're gonna need a dump. But I think we might. I don't know. We're still in a downtrend, but the bull flag and the bounce on that catalyst was pretty solid. So very well could start to flatten out and start to turn around today. That's all I'll be looking for. Maybe an inverse head and shoulders here being formed. Your head here and your shoulder here, and then that would also break the downtrend here. So that's what you need, is another shoulder here on a break of the downtrend. We could just break this downtrend and just trade flat, which wouldn't be good enough, because then it could just kind of keep coming down. But yeah, I don't know if it's if AMC and the basket will affect it or not. I'm kind of thinking it won't. I think since it's gone to OTC and it's in Chapter 11, it's kind of everything's changed with it. So still really liking BBIG. I need to close my short calls, I think, this morning on it. Shouldn't delay. Looks way too bullish. And out, zoom out. Yep. Yeah. Bullion shared a Hertz chart on Discord, which looked pretty interesting to me. Looked very familiar. So the yellow is, I don't know if that's when they entered. Let's see. Initial Chapter 11 plan wiping out shareholders. 2nd of March. And the green arrow was the revised plan on May 12th. That shareholders will receive benefit. But you notice this chart is pretty similar. We're kind of in this cup and handle right now. So I would say we're like potentially right here. It's another UR here chart. But yeah, cup and handle. And Hertz was on OTC also, I think, right? Yeah. Yeah, they had HTZ, or it was actually a different ticker, I think. Or no, was it? It was HTZQ? Maybe they stuck with the same ticker the whole time. I guess they must have, huh? No, this is a different ticker. Just look, this is from 2021. I think it might have actually been HERTZ. HRTZ. Yeah, I think it was HRTZ, not HTZ, but HRTZ. So this HTZ ticker has been since they've come out of Chapter 11. I believe. Aloha, Maui. Buys rallying up here. Tupperware is up 33%. 31.51. Maybe he was just trying to show pre-market. 31.51. Let's see. Yours is probably trying to show extended hours. Yeah, on my E-Trade it says barbecue's down 12.8% pre-market, so that's probably what yours is showing. It says it's at 27 cents. We might be getting a gap down on it. I don't know. Pre-market is so liquid, it's just kind of gaps all over the place. I've seen it say down 5% or up 5%. It opens up flat. Down almost 13% though pre-market. Yeah, we might have a bit of a gap down here. Let's see how we do. Low high thoughts? I don't know. I don't know where we're gonna open up. If we do have a big gap down, I'd assume just a green candle out of there because that's all that happens. If we do open up down here at like 27. Trying to predict the low and the high of the day I think is pretty stupid. Oh, I don't even want to try and do it. I just try and follow the chart and the pattern and whatever structures for me, I guess. I don't want to have a bias one way or the other if it's going up or down, or I don't want to try and have my thoughts be influenced into my positions and my plays. So yeah, that just clouds your judgment, saying, oh, I think it's gonna be here, I think it's gonna be here, and then you're always biasing towards one or the other and trying to force it. Gotta let it go where it goes and try and catch it. Anyways. Thanks, Mal. I appreciate it, man. Not just the kind that jingles. Is there new stuff going on with AMC? Oh, well, yeah, just Adam Aaron is like trying to resubmit a new dilution plan. That letter, I read that tweet letter thing he wrote. Has that been approved or anything? I don't know anything, I guess, other than that. It's kind of put GME in an interesting spot. Because yesterday it was, Friday was breaking out of the downside. Indicated to me that we're going to see at least 20 on it. Or potentially bounce on this level. Breaking this trend. But now that it's gapped up, we might be back up above that support. Well, it's not. Just here. So yeah. See if it holds below here. If we have that as resistance now. GME. That's all messed up on the 5-minute, isn't it? Or no, is it the hour that's messed up? Why does this look like a gap down? Closed up here, right? Or no, that's not where it closed. That's why I had that rip. Okay, that makes sense. Closed down here. Okay, yeah, here's your gap up. All right, so that's right. Yeah, so let's see if we use this as resistance, basically. I got about 10 minutes to open. Hello, Kiki in the background. Yep. Kiki. Red light games to go bankrupt without dilution. Yep. Yeah, that's kind of what I was thinking too, Cameron. It ripped because people just had to. It added some uncertainty to their arbitrage play. Because the deadline's come and gone and they're not going to dilute, so yeah, even though that might come in the future, holding that play didn't make much more sense. For now, it's too much risk. That's kind of how I took it too. They had to just unwind it. And yeah, the letter did. Yeah, I mean, we've seen that from Adam Aaron though. He says we have to dilute or we're not going to make it. So I'm not doubting that. I just, you know, yeah, he's not taking any pay cuts anytime soon. So, anyways, yeah, AMC has come back down. It's up 32%, but Ape actually recovered much better. You see, it came all the way back up almost to where it closed at. So that's kind of interesting. BBIG down 6 this morning. We'll see. See what today opens up with. Some pullback, I guess, would be warranted after that rally. There really hasn't been any. It's just been rally, consolidate, rally, consolidate. So do I hold my shares? Keep the cover calls, close out of the shares. I just keep running cover calls, honestly. I paid $700 for these shares. I got $245 for the cover calls. And they're weeklies. That's crazy. I can pay these shares back in a couple weeks. I mean, probably won't work out quite that well, but potentially. Got about 6 minutes to open. Morning, Guts. Better for the heart. Counting buds on his hammock. The heck? Up still looks nice. Full audit and slash the board. Yeah, definitely needs a whole new crew in there. AMC needs chapter 11. We might just get a rip on barbecue out of open from the basket if it is. Or we might get a rip anyways if it is a big gap down. If it's like immediate rip, I think it's from the basket. If it takes some time like this, you know, 10-15 minutes, I think it's just a normal dip buy like this. Yeah, definitely don't want those notifications. Renegotiate their debt under Chapter 11, though. But maybe not. I don't know much about it. Yeah, what you mean Carvana, how they dealt with their debt? I don't even know what they really did. They did something though. I was like, they got rid of over $1 billion in debt somehow. I was reading that. I didn't understand it. All right, 2 minutes, 2.5. Borrow fee still hasn't showed up. I was looking at that this morning. This whole run, it was basically, or the start of this run, it was no, wasn't showing any data for fees or, yeah, fees or shares available. Then right when they started showing up was the sign for the top. Literally right when they reappeared. This run, it was pretty much the same deal. Disappeared, we rallied, showed up for a bit, came down some, rallied, disappeared, rallied again, showed up, and it was the top. So, not sure if it will play out quite the same being OTC in Chapter 11. But I guess one thing that is different with this is the available shares. Notice that back here, it only would come up a little bit and then there wouldn't be any available. We've had this, basically the orange line. This orange line has been pretty steady all the way up. All right, market is open. Still have Tupperware up 30%. AMC is up 33. SPY is ripping out of the gate. Barbecue does a gap down 10%. So it immediately comes up. It hasn't. But I don't think it's, yeah, I don't think it's doing basket moves. I think it could come up just with retail buying the dip, but yeah, I would think an immediate move up if it was moving with AMC or GME. I just broke some level there. I don't know what level that was. So 29.92, barbecue's down 5, SPY is just green lighting. Green means go on SPY. Morning, David. They reissued bonds and pushed the date. So they didn't really get rid of their debt. That's a crazy open on SPY. Party City's up 35%. Barbecues 29.93, down 5. So yeah, the gap down was real. Back to its 30-cent support. Look at that. Look at that move. That's a crazy. Oh, the rebalancing was last week. That's right. You might have some things getting shaken around here. Dang, these BBIG covered calls. Oh, it's so bullish looking. How could I? Wow, dude, look at that thing. BBIG. You cray. Not a good idea to buy calls in the first few minutes, but AMC is halted. Halted down, yikes. Profit taking at its finest. So heavy they halted it. Jeez, BBIG is already green. See if it rejects here. Yeah, plus 1.8% now. Barbecue trying to fill that gap a little bit. 28.27 down 10.25 though. AMC still halted. Jeez, BBIG just blew through that. Dang, 5% already on BBIG. Busted through that high. Okay. I guess I'll just be rolling these covered calls. Couldn't get a fill this morning. Such a short window. Look at SPY, wow. Yeah, BBIG. We might be hitting $4.80 today. One step at a time, I guess. Oh my gosh, 12% on the thing. Holy crap, 13.5. He's gonna get halted too. Actually, how's it not halted already? Costs up 18%. %, dude. This thing. Oh wow. It's interesting. The calls, they're not moving a whole lot though. Honestly, still pretty good deals on these. Maybe. Now it's only up 38% this morning. Weeklies. %. Wow. Barbecue 29 cents down 8%. AMC still halted. Boss is holding 18%. 15% on BBIG. It's ripping. 16. 17 and a half. I don't know how this thing's not halted. Love it. 18 and a half. 19 and a half. 20. There's $4. So you have some psychological resistance, of course, at $4. And a little bit of actual resistance here on the chart. Like closer to 460, 480. Or bigger resistance potentially. That's been crazy this morning. I'm down like 6% pre-market to up 20% in the first 10 minutes. Tupperware is ripping also. Yeah, 50% on Tupperware. AMC's resumed. We got FaZe joining the party. Boss is hanging out. Neo's up 5. I almost did more cash good puts on Neo. Getting some resistance there. Oh, crazy how that lines up. It just continued its trend, but turned into resistance. What? Eyes coming down there. Okay, a little rejection there on BBIG. A lot of volume though. Looking really strong. I'm still trying to get out of these short calls. Spy kind of bull flagging up here. BBIG consolidating, it's just below VWAP. See where it finds support. Looks like 360 is maybe a level I have drawn here. Yeah, 360 might be support now on it. Buys bull flagging. Added shares on that breakout this morning. Wow, I did not. That was gonna be so explosive. It was crazy. Next down 3.5. Still above that 61.8%. Or what is it? I don't know, the golden pocket. Still above that. New high there on SPY. Maps up a little bit. Zim's up 1%. Got some at close on Friday. Noise. Barbecue bouncing there. It's trying to fill that gap. See if it continues to use this line as resistance. Morning, Bruce. Close enough, yeah. Yeah, nice rip up to $4 this morning. Why is BBIG moving? I don't know. I don't know if there's any catalyst on it. Tupperware, 50 more % since it's open. What? I don't know what the catalyst is on Tupperware either. Shorts closing? I don't know, because this was said to be going to Chapter 11. Almost 100% on Tupperware. We had a incredible reaction to last news. When that filing dropped and it looked like liquidation for shareholders. You mean the reaction from the reaction? Because the original reaction was down like 35%. We even have Nordstrom up here. I still have Nordstrom calls. Oh, I closed out of those. We're getting a pump into retail, looks like. Highs coming down here. Might be looking for a long here. Yep. BBIG holding up above that 36 cents. Looking good. I'm gonna get out of my run calls. Hoping to get more of a pre-earnings run up, and we're getting too close to it. I'm getting nervous. They're not gonna have one. Dude, freaking E-Trade, man. They're lagging again. What? I got filled. I think I was getting bad quotes. August 23. I'm gonna look at this. Definitely gonna call them if this is in their lag. Supplies come down more here. Two and a half. Yeah, totally screwed me on the fill. The lowest volume on that thing this today. I added to BBIG shares. Yeah, I just picked up some more BBIG shares. Trying to get the bottom of the bull flag, but I step away. SPY took a big dump there. Nice filling that gap. BBIG, let's see, 430.90, 440, 48, $4.80. I think is probably the next area of resistance. It's already up 33%. Holy crap. Thought it might be able to go to $8, but this thing just started exploding. I wasn't able to get out of those covered calls. It's halted there. Wow. So now it'll show up on a bunch of screeners and yep. I'm fine to roll these. I'll just roll covered calls on it. Got 7 covered calls. But I wanted to get more shares, so I didn't have them all covered. Cost came down a little bit, 10%. Tupperware's settled down. I think it was up almost 100%, I think. AMC's coming down some. Trying to close out of these earnings plays too. 1 and 2 last week, but they're all pretty much red days. Tempted to even close out a neg too, dang it. Why didn't I close them? Been a while since I've actually just traded straight options. Forgot how to do it. You just close any day you're up 4 or 5% on the underlying. Doesn't matter how good the chart looks. It's gonna consolidate and come down, and you're gonna run out of time. Neg still looks good, but who knows how long it's gonna take. Happy Money Monday to you. Morning, Daniel. Barbecue. Yeah, barbecue just filled Build some of the gap, not completely. Low volume. Could keep filling it. Looks like a smaller version of this day. AMC's bouncing a bit there. GameStop's below. Below that level. Might get some puts on the old gamer stock. Always told me I was hard at it. It's hard, yeah. We set those stop limits or stop losses or whatever, and then I mean sometimes it makes sense to get back in, but alright, BBIG is resumed. Didn't slow the momentum yet. Nope, it's ripping again. Wow. So 48, $4.80. Dude, this thing's going crazy. There's really not a whole lot left after that. The next major resistance isn't until $8.18. These are all just kind of base hits, I guess. Just little zones of liquidity that it could slow up on. But not a whole lot of volume or anything in these areas. Or just consolidating on the way down. 42%. Wow. It's 45%. It's breaking that 480. Not Mullen instead. Morning, Mo Lava. At least Doge is up. Check DD. A super stock user's perspective. $5. Wow. Look at that volume. $5.60 would be next resistance. Is it halted? I think it's halted. Yeah, it's halted? Yeah, it must be. Not saying it's halted yet, but I think it must be. No, time and sales is still going. Weird. It's like a fake halt. It was timeout of the game. AMC's up 16%. Yeah, it's tripping out my brokerage even. That's weird. That was really weird. Even my brokerage started like saying I was down a lot on it. Okay, BBIG's come down a little bit there. Barbecues climbing some. I guess still wants to fill that gap. Jesus, short calls. Down a lot on those short calls now. Oh well. Shouldn't have been greedy this morning. I was actually up on him this morning, but I wasn't sure. Even the break of that, I do false breaks. I guess I hedged it by buying more shares. Yeah, that makes sense. Because Ivy's high, it's not. I mean, it's not a good time to buy calls, anyways. I actually have to keep myself from selling more calls. Might try and roll these actually even this morning though. We'll see. Wait for some more consolidation maybe. Looks like it's setting up to make another move. I don't know, this thing might hit $8 today. A lot of volume, a lot of momentum. Probably not, but 480 is some contention. How high are we going on barbecue today? I don't know. I don't really know. Had a gap down 28 cents. So far, we're making lower highs, lower lows. You discount this, so just have to turn that around. Nice consolidation on here, above VWAP on BBIG. Ready every day. Triple digits. Oh my gosh, you guys are insane. You don't go from like $2. It rips a bunch of 5 and then it's just immediately triple digits. No. Anything's possible. Okay. You could be the first person to land on Mars. Congratulations. $10K on AMC? You made 10K? Or you have 10K in. AMC back up to VWAP. Looks like I might want to start rallying actually. You've got some support. On that $5 level. There's been resistance as of late. Maybe it holds above that for support. That would be pretty bullish. User engagement dropped 70%. Yeah, people want to sign up, get their name. It's not like they're going to just start using it like crazy all of a sudden, right? Barbecue only down 1.65. Looks like it wants to fill this gap. $10K at 433. You bought? All right. May the odds ever be in your favor. Buys rallying back up there. Yeah, AMC's fighting VWAP there a bit. SPY's making it back to VWAP. can't answer that for you, Safe. Yeah, that's what I'm saying. Like the options, they've moved now, but oh no, they're super high. 100%. No, the first like 10 minutes of the move, 15 minutes, they hadn't gone up crazy. I was only down like $200-300 on my short calls. Now I'm down like $900 on those short calls. So from here to here, those things tripled. But yeah, now they're expensive. At least the weeklies. Yeah. They're all pretty spendy. Buy back to VWAP. BBIG consolidating up here. I don't think I'm not going to add anymore. Try and stay out of selling any covered calls though anymore. $4.3 million on BBIG. No, I didn't spend that on BBIG. Yeah, I think go to 6 for sure. For sure. Already got all the traders scan for halts. The volume been building up pressure for like a week or more. 13 million this morning. Wow. We're in a reverse split squeeze on this thing. That's the only catalyst I see. Oh, Messiah. I think he meant $10,000 into it. Halted again. You're talking dollar figure. SPY rallying back up. Wow, what a just choppy big range day. 73% back on Tupperware. Right around VWAP. AMC's above VWAP now. Alright, you probably get a retest of the high there on AMC. That might be a good trade. Where's the resistances on him? We're out of support. Pre-market hit like 8 something. So it might even want to climb all the way back up there. I don't know about today, but BBIG is resumed. Up 60%. 532. Blink's up 1.8. Blink calls I'm trying to get out of. Lift's up 1.6. I want to dump these two. All these I just held through profits. I forgot how to trade. Got some time on lifted. Okay, what did I get rid of this morning run? That's probably fine. 72% BBIG. Go all in on Airbnb puts. For earnings. How much did it halt? It's halted 2 times, I think. Right here and then right here. I'm gonna put an order out to roll these up. if I can get lucky with a spread here. I'm in order to roll up these covered calls if I can. It probably won't fill. New high there on BBIG, 58.40. It's up 70%. $56 is a nice support if you can hold that. Next resistance, 66.80. Barbecue hearing, 10 a.m. I didn't hear anything about that. Oh, yeah. Sorry, I'm way behind. Does look like it started for today. Actually, like it hasn't started. Barbecue's green. There you go. Filled the gap. Up 1.5%. Looking for an inverse head and shoulders to form here. I'd say with this being the head, here's your shoulder. One other shoulder over here. Or up here. Thoughts on AMC 8? It is kind of interesting that, excuse me, how much Ape came back from the after hours move. To AMC, like it went up almost 100% and came back to open was like still up like 40%. Sold off since open some, but Ape made it all the way back to where it closed. Which is kind of interesting. But yeah, they've typically inversed, or they did. So that's kind of normal, I think, for the way they're set up. 60% on BBIG. Still no shares on barbecue. So you're talking about BBIGs. Yeah, BBIG cost to borrow did go up. Borrow fee shot up this morning to 100%. Or no, that was last Friday. Nothing available today. Nice. Yeah, on Friday it started shooting up. Laying around 15 for a couple months. And then Friday started shooting up. Went up to 105. By 1:30, and then they weren't available. Morning, Mohammed. 70% on Tupperware. 32 cents on barbecue. It's up 1.5. One and a half on GME also. I think it's still, yeah, it's still below that. Pretty good volume on GME this morning. Buy's making a cup here. Looking for a handle. Handle. One and a half on barbecue. BBIG is consolidating up here. See if it holds above VWAP. Yeah, I don't think there's a court. Good morning, Mohammed. I don't think there's a court either, Wayne. I'm in the queue here and it says nothing. I'm not sure what's going on. Well, he had a gap down on barbecue. And you've just seen it climb back up, so people are buying the dip again. Still in a downtrend from this false breakout and this head and shoulders we built. So the false breakout above 38.79, the head and shoulders. So it's been in downtrend since then. That has accelerated right here. So if it decelerates some and we start using this as resistance and start to form a bottom, another bottom, another cup. BBIG's holding up pretty well. Volume's pretty insane this morning, 21 million on it. No available shares on iBorrow with the borrow fee that ripped up. Upward consolidating. Cost consolidating. Highs coming down here, see if it's building a handle. There's a pop through barbecue. 4.5%. Highs coming down to VWAP. If it holds above there. So far just wicked. Yeah, just looking to see if it forms some kind of formation. There you go. 32.98. 4.5 on barbecue. That is neat. Next channel to break would be this one. Safe. I mean, without a time frame on BBIG, it's unlimited how high it can go. Always unlimited. I mean, it was building up for some big candles for a couple weeks now, and Friday was even a pretty big candle. Nothing like today, but Friday was the biggest candle I had in a while. But yeah, now today really explode. Big explode. Neo's up 8. XBev's up 8. Barbecue up 4.5 now, so not bad. From down, what was it down? It's up 17% intraday. That's crazy. This could also be a double top J-Souls on SPY. Market's going to be kind of waiting for, I think, JPAL this week, so any moves are going to be somewhat muted, I think, until then, or could easily be reversed. BBIG cruising back down to VWAP. G-pop. You poppertize? Aloha, Maui Sam. AMC's consolidating here around VWAP. Cost popped through VWAP there. A lot of volume on cost today, wow. 32.60 on barbecue. Up 3.5. BBIG is under VWAP now. Under the 480. Next support maybe 410. Barbecue came back down there below that resistance for now. AMC above VWAP. As freaking E-Trade is lagging again. Did it just fill that? Yes. That's annoying. Well, I got some weeklies on AMC. Some debit spreads. Real small position. Nighthawk bought a share of AMC. Coming up on 10 minutes to 11. Exciting start to the week. Happy Money Monday to you. Thank you guys for your likes. 27 on the day so far. AMC is climbing up there. Basically for this spread, I just need AMC over 5.5 by Friday. Dang it, Ronald, screw you, man. Come here and pump all these trash stocks after they've rallied a bunch. And then the one that you didn't pump, that's actually ripping, saying they should do a share offering. Agreed. But all these trash stocks that you pump, when you're pumping them, that's when they should do share offerings. I don't know the financials on BBIG, but yes, most likely they could use the capital. That's the reason stocks trade publicly, is to raise money. Buys moving out more. Yes, and NDM consolidating up here, which is nice. It seems strange it wouldn't have a pullback to build some support. Yeah, I don't like that chart for long. Not at this point. 3250 on barbecue. So holding above that trend, that's good. Good to see. Starting to see some tapering. These highs are getting less aggressive. These lower highs. Should I stay in this Zoom meeting? I don't think it's going on today. No way. Zip just pumped lift. Did I just close those calls? No, I didn't. Did I delete that? This is Zip Trader's pick as lift. Too big of a float to get a pump. Like his normal pump. Oh, never mind. Lightest, not lift. I say that's a large market cap for him. Lightest was his pick. Ah. 3%. Alright, let's see if Spy can make it. Didn't really make much of a handle there. Real subtle one. Could wait for it to break the high of the day to go long. 15% on costs. BBIG is holding up, which is good to see. Breaking VWAP wasn't very bullish looking. I can't. I'm out of practice on just calls. Just naked long calls. Forget, you just have to dump them. You hot potato them no matter what. No matter the expiration, no matter the strike. You're up, you sell. Hot potato. Oh, is AMC still rallying? The spread's working. Yeah, AMC is ripping back up. I think you could make a little cup here. Intraday. And then looking at pre-market, I mean, it's got a long ways it could rally. SPY could still be kind of making this cup. Hasn't made a clear handle yet at all. Me. OS is above VWAP now. Redfin's up 5. Tesla due for a bounce. Might make it down to the support first, I'm not sure. Pretty ugly looking chart. SPY's coming down a little bit here. BBBYQ 3240, it's up 2.8. We have EU closed in 30 minutes. NEO's up 11. Wow, this thing just keeps climbing. I have a breakout there on NEO. GME's up 1.8. Dish is up 3%. Safe's up 0.3. Charge point's up 0.6. A little inverse head and shoulders there on AMC that played out. Let's see if we build a little cup. Nicholas down 5.8. Still a nice bull flag. A close snap? Yeah, I think I closed snap this morning. Yeah, I did, thankfully. Closed snap, closed run. Still haven't closed to lift or neg. I like these better. Neg, it's kind of head and shouldering there. Maybe not. I don't know. Link's up 1%. Nirvana's down 3. Looks like it's filling that gap. Oh, Mara looks like a nice short. I don't know if I have any buying power left. Oh, they had a bunch of strikes on Mara. Need to close some positions here. Zoom's down 1.2. Not liking this head and shoulders it's building up here. BBIG popping back up through VWAP. Costs up above VWAP. GTI woke up this morning. We're looking at DFLI actually, pre-market. Things had a nice chart. Flies back down to VWAP. AMC makes you a millionaire? I don't know. I'll have to have a pretty big position for that to happen. You just squeeze when people go all in again. What? The news was bearish. The fact that they can't dilute is bad for the company. Yeah. What share price do you know on AMC to become a millionaire? Oh, GME, alright. 2%. See if it rejects this resistance. On the daily, it looks different. That's annoying. Yeah, the 1 hour, the 30-minute, all the shorter time frame shows it's below it. Then you get up to 4 hour, it shows it's above it. 4 hour daily. Up with that. You just can't. If that's not consistent, you just can't even. It's not useful. $32.50 on barbecue. Up 3%. Just chopping around here. But maybe testing the high. 4,000. $4,000 a share. Anything is possible. Toss around VWAP. Looks like it wants to move up some. Let me look at what you put in there, Cameron. Now that it's slowed down again. You're all sleeping on the wrong stocks. Constantly getting corrected by deep value investing in Discord. And shamed. Supersonic user perspective, considering investing. We here at Popcorn are dying. They don't react negatively to that information. Everything rash, like sell your shares. A super stonk? This is not super stonk. This is ape. We just want you to be aware that our situation is very similar to that of a couple of other major companies we've also been invested in. They're now totally beyond saving. Not because of anything we did wrong, and we'll certainly continue to do wrong in the future, but just because of the way the world is. Also, oh, this is and also kind of because of you. Elders, we love you so much, but you're kind of spraying diarrhea all over our ape scam right now. A scam which was carefully designed to dilute your stake. Deliver boatloads of cash directly to your mortal enemies, so please stop it. Just stop it. I need this. Also, send money ASAP. Be sure to go see our latest batch of movies in uncomfortable chairs, rooms full of sick people at even higher prices during a brutal recession. I get it. I get it. It's not DD. New high of the day, they're on SPY. Koss also looking like it wants to break. That's weird actually. Koss has the same candle as SPY right there, kind of. I never liked that handle on SPY, but there's the breakout. Could wait for a little retrace here, which is maybe what this is right now. Unless this is false. Mara and Coin. Who has shorts on Coin? Why did I sell? These are up. They all were up. BBIG back to VWAP. Ain't out above that resistance now. Buy new high of the day there. TBLT up 6.5. Express 9.5. Oh, Express is actually ripping. Wait a minute. Forgot about Express. I was thinking this was Koss. Express has options. Look at that IV. Beautiful. Wait. No liquidity on here. Did Express always have options? Yeah, you're getting all the retail pops. Tupperware, 70%. AMC looks like it's still building this cup. No bull flag here on the 5-minute. Neo's at 11. Baba's up 5.5. It's DD to me. Nice. 455, por favor. PLD. 23%, yeah. Break out of that consolidation. Not really, actually, just a pop-up. Still in that range. Oh, that's on earnings. Mullen's down 7.5. How are you doing, JH Trades? Still buying into this? BBIG back under VWAP. Wow, look at that rally on Home Depot. Totally broke out of that range. GME's up 2.6. Tesla's rallying. 2% on Tesla. Iran's down 4.5. Points down 2.5. Ubo's down 5. Upstart's just consolidated up here. That's crazy. Really held strong. Highs coming back down a little bit. Wafers held up there too. The IEP's up 1.7 today. Charge points up 1. Pac West is up 5. Neo's up 11. Burn down 1.2. Wow, Airbnb's been just ripping. Up's up 4.5. Peloton's down 2.5. Just reviewing all these ones we've theta farmed. Seeing where they're at. Probably better to be in cash. A lot of catalysts this week. BBIG broke down a little bit. Like AMC's rallying. Yep, AMC's finishing up this cup. You're very surprised Barclays in the green today? Really? Because the pre-market, or it's back at last week's trading range? Nags down 6 now. Carvana's down 5. Spotify's down 5.
Above 15, then we've got our trend line.
Okay.
It cost us up 16%. This one might be interesting. Like Express popping up too. Really, all of the basket is kind of up a bit. GME, wow, yeah, 3.3. That's not a bad day in recent history on the stock. Buys coming down. Well, yeah, if GME breaks up out of this resistance here, could be a good play.
Seen that since 2017. Here a look at the exact numbers right now. As you can see, the
Rise.
18 points at 45.54.
That's pretty choppy.
The Dow Jones Industrial average 35,424, up 196 points, a 0.5% gain there. The Nasdaq up just fractionally, up 7.
Really, Poison? You're holding AMC? I'm always surprised by how many people that watch me that hold AMC on the Discord and you guys on YouTube. It's shocking. Wow, AMC almost completed the cup though. Looks good.
We have a third of the S&P reporting, and Domino's Pizza reported its earnings this morning. We'd like to hear from you, your thoughts on what the company said and the market reaction.
Nicole, it's been a volatile session to say the least when you're looking at Domino's. Earlier in the pre-market, we did see it sell off fairly significantly after we got the initial earnings results. But as the market started to digest some of the internals on this report, it started to actually like the overall trends.
Tupperware still consolidating around VWAP. BBIG keeps getting scary looking, but continues to consolidate.
That came in at $1.02 billion.
AMC climbing back up. This is almost the top of the cup here.
3.8% decline on a year-over-year basis.
Neo 13% now.
Actually did beat the street's expectations, coming in at $3.08 versus the street's estimate of $3.04. Now we did see this contraction when it came to revenue because of lower order volumes, as well as the company's market basket pricing starting to come down just a tad bit. But we did see a pretty healthy increase when it came to gross margin. It actually grew to 39.5% versus last year 36.3%. So even though we are seeing a little bit of a pullback when it comes to pricing, we still are seeing a significant amount of pricing power when it comes to Domino's. Global retail sales growth actually was up around 5.8% on a year-over-year basis, and they netted.
That gives me a nice instead of popcorn.
That were added after opening 250.
I like that, Kitty Daddy. You're like a no compromise investor.
Kind of a little bit of a mixed report, but
no compromise on your popcorn.
With Uber, as well as their pricing power continuing to be sticky for the marketplace, and hopefully they are able to keep these margins expanding over the next couple of quarters. That's what the street's really hoping for. Key technical level right now, it has to stay really above that $392.50 level from a technical standpoint to try to justify a little bit of a breakout. Getting some headwind there right now. Let's see how it's going to end up at the end of the session.
All right, Kevin Green, thank you for that. We'll keep an eye on Domino's Pizza, senior markets correspondent. Thank you, Kevin Green. It's time for a spotlight on AI and a forecast where it goes from here. In fact, some new data and studies from Futurum, and right now we have Stephen Dickens with us, VP and practice lead at the Futurum Group. And I know that you have some new data never publicized before for us here today in this conversation. What are some of the themes that you've been seeing, and what about this research?
Nicole, thank you for having me on the show. We've published some new research today. Total annual software and AI cloud compute revenue will reach $182.2 billion by 2027. That's a 22.6% CAGR from the numbers we saw of 65.7 billion last year. Obviously the AI market's exploding. We've got a big earnings week this week with Microsoft and Google reporting. So I'm expecting those CAGR and TAM numbers to start to reflect in their earnings.
Right, unbelievable. So you see this growth happening. You said 182.2 billion going forward. And what names are the names that keep popping up when it comes to these types of topics when you talk about cloud and AI?
Well, obviously you've got the big names. We've got Microsoft and Google reporting tomorrow. Obviously Nvidia's part of that equation, but we're seeing it across the entire sector. We're seeing, I was out with Splunk last week, got a chance to speak to Gary Steele, their CEO.
Interesting.
They made some key announcements. I published an article on Forbes talking about what they're doing in that space.
Tested VWAP again.
Antonio Neri from HPE just a few weeks ago.
AMC completed the cup.
Yeah,
also,
sure.
we're seeing all those names benefit from
for retrace here.
So as we await earnings from Alphabet and Microsoft this week, are you really expecting some good news?
I think so. I mean, obviously, AI is still relatively new to reflect in this quarter's earnings. I'm expecting there to be a lot of mentions of the word AI on those earnings calls. I don't think there's any surprise there. I think
19% on cost.
Last week from Microsoft around pricing for some of their Copilot. That's going to be
Press
interesting.
up 7.
They were announced pricing at $30. Market consensus was at 20. So I think that's going to be interesting. I think for me, it's laying in the foundations this quarter, and then I see it accretive in coming quarters.
You said you've already seen some signs. You look at something like
12.5 on Neo.
What's the takeaway from something like IBM?
So IBM reported last week, beat consensus estimates, relatively flat from a revenue point of view. But
top back to VWAP.
I think they made
BBIG holding up.
a few months ago now with Watson X, which we've been
AMC
tracking.
consolidating.
I think what they're doing
maybe building a handle.
Where the sector's going to go around enterprise AI.
Weren't they the first, right? Remember Watson? Right. I mean, I remember scratching my head at that time and saying, look at this. And now we've got Watson X and so much more. When you talk about the different economic sectors where you expect to see some growth, you have leading and lagging sectors going forward. And this is over what, probably a year, 2 years, 5 years. Which ones are likely to lead?
I think financial services. Telco,
Just
you're gonna
investing
see
principles does
retail.
not
It's gonna be
will
interesting
not
to
be
see
violated.
Google's numbers this week as a lead indicator for where we're seeing the advertising space. I think those are probably the
Got an RSI
sectors we'll
divergence
see.
there on the 5 minute.
We've got some details in our report.
Yeah, it shows up without extended hours also.
Fresh off the
That's a
press,
bearish
so I don't
signal.
have those committed to memory yet.
Yeah, no, I see them here. You gave them to us.
Well, this
Telecom,
chart's
healthcare,
pretty
business
just choppy.
services, auto and aerospace,
Range
retail,
bound.
financial services. On the downside, industrials, real estate,
Ah,
construction,
BBIG.
food, beverage,
Hop up
food
through
and
VWAP.
beverage. I thought everybody wanted to
Same
get
with
out
TUP.
there, and logistics and energy.
Well, I think it's going to be a challenge. All these tools are there. The speed of the cloud providers, we're going to see
Price
that
coming
with Microsoft
down.
and Google. The speed to bring AI to market. Some of those sectors are going to benefit earlier.
Did you mix your
Others
exit,
are gonna
J
take
Souls?
longer to adopt.
It hit
What
454,
about someone like
58.
Elon Musk? Are people betting too much on the players as opposed, when they look at someone like Elon Musk or they look at what's going on with Jensen Huang at NVIDIA, things like that?
Well, there's always a cult of personality. I think
Right.
if I was to talk about where Elon's portfolio of companies are,
Sure.
obviously lots of media attention around the X. He came out with XAI. What was that, a couple of weeks ago? I
Yeah.
think Tesla's got a huge corpus of data from its autonomous
Yeah, do you guys
driving,
know
its
Twitter's
cameras
like
that
X
you
now?
can leverage. So I think there's going to be some interesting things ahead there. You mentioned Jensen from NVIDIA.
Sure.
They're on a tear right now.
On a tear.
Yeah.
I mean, I can't see that changing over the next 18 months.
Likely to be a very popular baby name, from what I understand, right? After what we've seen with what has gone on. That being said, are you worried about anything, or are there any surprises here? Because when you talk about this growth trajectory for cloud and AI to be exploding, are you worried about anything in particular?
Well, I think obviously everybody's worried about regulation. We're going to see that start to on the horizon, I think. Maybe in Europe first. I would think they've got a more regulatory heavy framework than we do here in the US. So I think maybe that's a headwind. But I think from what we're seeing and our numbers and the research that we've conducted,
Right.
it's only tailwinds for the big names from here.
Yeah, I mean, you said it's all for AI, cloud computing, software. Overall, that's the big picture. Steven,
Well,
yeah, final thought? You had a final
Well, I think
thought?
it's some of the OEMs as well, the
Yeah.
HPEs, the Lenovos, the Dells. I think they're also going to benefit from this tailwind. It's
Sure.
not just the public cloud providers.
Stephen Dickens, thank you so much. Great to see you, of the Futurum Group. Thanks for being here.
Thank
Great
you so
stuff,
much.
really. It just shows it's going to keep on going. So we know the AI boom has been hot, and it seems like it won't stop. All right, coming up next, we're going to take a look at the disruptors. George Silas is standing by. He has the big news here. He's looking at Lam Research. Stifel upgraded those shares. He'll give us all the details, and we'll have an example trade for us next here.
Morning, Jay from the Bay. Morning. Restop and return. Handle form on AMC. I'm watching SPY. Kind of has a little head and shoulders here. See if that holds or if we come down. Yeah, you have some retracement there on a handle for AMC. Yeah, I'm gonna take a short here on the SPY. Brokerage is broken.
Downside. So altogether, it's a four-legged structure. We're going to sell it for about $3 a share or $300 a contract. So the whole objective.
Yeah, that might be the only handle you get on there.
The stock to stay below 685 or above 600 between now and expiration on Friday. We're going to earn $3 to sell this trade, but there are risks.
Might dig a little deeper.
$7.
VWAP would be like 50% retracement.
42% return on risk, and the risk is not.
I'd still see that
unless the stock hits 695 or higher, or it's on the upside, or on the downside 590 or lower. So if you think the stock is going to stay within that range, 685 on the high side, which gives us that flexibility, or 600 on the low side, this is certainly a trade you can consider. But I will stress that this is a 4-day expiration, so it's a sort of hit or miss kind of trade.
All right, thank you for that. George Stillis, great to see you. Appreciate it with today's Disruptor. Looking at Lem Research, thank you. Coming up next, it's time for our 360 round, taking a look at what went on at the big box office this weekend. Double features bringing in the bucks. AMC. Want to know what's going on with these types of companies. At the same time, you still have the writers and actors strikes occurring. We haven't seen something like this in 60 years. All of this about the studios going forward. And you have Barbie and Oppenheimer, the double feature that really did incredibly well this weekend. Coming up.
million for the whole weekend domestically. The numbers have come in on Barbie and Oppenheimer, and they've both gone up a bit, collectively almost $10 million more box office. This is really exciting. It's a great time for movie theaters. Of course, the headwinds that the actor and writer strike is creating, that's looming out there.
We have a
This is just
pencil.
a great weekend for movie theaters.
Nice
Really boosted the
analogy.
box office. What a difference one weekend can make. Coming into the weekend, we were down 7% versus summer of 2022 last year, and now we're up 1%. So that's a big deal for sure.
Right. Yeah, without a doubt. In fact, after this court ruling on Friday, the shares were skyrocketing after the bell on Friday. In fact, they were up about 60%. So, you know, folks were expecting a really big opening this Monday morning.
Nice bull flag there on Express.
We also have the CEO that has been talking about they have to have the ability to be in the position in order to raise equity, right? I mean, that's part of a winning plan, isn't it? When you
Sorry, on AMC? Yeah.
Yeah, it is. And like Paul said, it's the box office weekend was really favorable for AMC and for a lot of reasons. One, because it has the most IMAX screens in North America, and IMAX certainly outperformed on Oppenheimer, and AMC should get a nice cut from that. And also on its Dolby screens, it was showing Barbie. So it should have, gained some nice market share over the weekend. I think it's well positioned. That being said, if this writer strike does go on, they are going to be in a tough position next
Barbecue
year,
coming down a little bit.
And we'll need to raise cash. And even if it doesn't, the release slate could be bumpy for them. There are a variety of reasons that they should require cash. And like I said before, they can still use their APE shares to raise cash, but it would be far more beneficial for them to use AMC shares.
They can't. I mean, not right now. They denied it.
Yeah, as we take a look at the shares, I mean, for example,
If it's a double top on SPY,
AMC, we're up 28%.
there'd be a little cup and handle being formed, but
IMAX is up about
when you're just in
60%
chop, it's like
today.
these formations don't mean
And,
much.
Cinemark is also gaining up almost
It's got to have some
2%
kind of
today.
trend and direction
We're also
that's
talking
clear.
about the strikes that we've been seeing. What are your thoughts on the big picture of all of these companies? And
Barbecue's now
how long
red.
Can this strike go without truly impacting
We suck again.
these companies? And not only these kinds of movie theaters, but also streamers.
Yeah, Nicole, this is probably the biggest, issue facing the industry right now. The writer's strike, of course, directly impacts the ability to write scripts and create the movies and can impact the production pipeline. Right now, there's plenty of movies for now, through the end of the year. But after that, if this goes on for a very long time, which we hope it doesn't, that's the movie pipeline, the content, if you will, if that dries up, that's definitely devastating. And then the actors strike impedes the ability of the actors to go out and campaign for their movies and go on talk shows and talk about them and do all those promotional opportunities. Imagine, if you will, if Barbie hadn't had the opportunity to have this run up with all the actor involvement, and Oppenheimer as well. And Alicia's spot on. I mean, in terms of the IMAX component, that's very important, but you got to have content to put on those big IMAX screens in the premium large format. And like you said, think of all that popcorn and soda that was sold at AMC and other theaters this weekend. Pretty monumental, because it's not just about the tickets, it's also about the concessions.
Definitely not about the tickets. I don't think they make any money on the movie tickets. If they do, it's very marginal, and probably just on certain ones.
11 a.m. and 2 p.m. right here on the TD Ameritrade Network. I'll see you at 2 o'clock for the watch list. Keep it right here. Fast Market is next.
BBIG consolidated really nice here. Right on VWAP, right below it.
down consumer sentiment data on Spotify, which is up over 100% so far this year, but down sharply today on some pricing changes. Now, 2.5 hours into the trading day, stocks are slightly higher to start a week of key earnings reports and major policy decision from the Federal Reserve. The Dow Industrials are up for an 11th straight session, and about 1/3 of the S&P 500 reports earnings this week. Now, let's take a look at the major indices, which are off of session highs, but all in the green now. The S&P 500 up nearly 0.5%. Dow Industrials up nearly 200 points, or over 0.5%. NASDAQ 100 lagging a little bit, but still up just over 0.1%.
New high of the day there on SPY.
The small caps up 0.25% today. To help me break down this market action, let's bring in my co-host Kevin Hinks. Kevin, your take here. I mean, I think the anticipation of earnings season really ramping up has got a hold of the markets here at this point. But at the same time, we got the Fed coming out on Wednesday.
That's how some stuff works. Anabolic.
Big week is an understatement.
Yeah.
For sure.
But here's the question.
I mean, just for profits, not for like
Friday's closing bell,
10-year long holds.
What will be the thing that really moved the market? Right. Is it Jerome Powell? Is it earnings in high cap tech?
Those are called trades.
Which I think is going to be one big theme that's going to settle in here once we get to midweek is digital ad spend. So many names this week rely on digital advertising for a lot of the revenue. Meta is one of them. Mm-hmm. Now, they're going to have other stories, right? They're going to talk about AI. They're going to throw that at you.
Yeah.
But make sure, they mentioned that digital advertising is rebounding. But there's something for everyone. If you're looking at the consumer, it's Visa and MasterCard. Digital ad spend, how about this? It could be Snap, it could be Meta, it could be Google Alphabet, it could be Microsoft, it could be Spotify, it could be Roku. Yeah. All those names will talk about advertising. We've got energy at the back half of the week. I know Chevron already pre-announced. You've got autos, GM and Ford. So, I mean, there's a lot going on. Total, 946 names, 166 in the S&P, 31 in the NASDAQ, 12 in the Dow. So massive numbers in terms of earnings.
Yeah, we'll finally get some clarity, and I think guidance is going to be key here moving forward, Kevin, for a lot of these companies. If there is going to be the economic slowdown that a lot of people are predicting. But one name that's kind of pushing back against a downgrade today and because it's higher, and let's bring in Jenny Horn, markets correspondent here, to discuss Tesla.
Jenny.
UBS comes out downgrade.
Tupperware.
Doesn't seem to
Right at
matter
BWAP.
too much for this stock, Jenny.
It sure doesn't, and I have to say that I did take the advice of Kevin Hinks. I rested up all weekend long so I'd be prepared for the week that is going to be very, very busy, and it already appears like things are busy for Tesla shares. They're up over 2% now on this session, so a nice performance after what was a pretty lackluster second quarter result, especially the second quarter move we saw. So today we're still seeing analysts react to that quarterly update Tesla gave last week. UBS, like you said, Tom, downgrading shares to neutral from buy with a price target of $270, which does imply some upside from here, and that's up from $220. The analyst does think that after some recent strong share performance, which they said is fully reflected in the demand response seen after Tesla's price cuts, as well as the solid execution now in 2024. But the company's second quarter results, they said, really validate the pricing strategy with their small decline in auto gross margins. Despite the decline, they're seeing an average selling price by around $900 per unit in the quarter. Going forward, they see upside risk to consensus estimates, which seems very limited, they said, because Tesla's strong execution is already fully reflected. They continue to see Tesla globally leading the race to affordable electric and autonomous mobility, but said that on a one-year view, the stock's risk and reward looks balanced. Shares, even with that almost 8% move to the downside after their second quarter results, are still up 116% year to date, up 161% off of their low. And then, of course, we also still have GLJ Research, which is Gordon Johnson's firm, reiterating its sell rating with a $24.33 price target, which to me, at that point, you're just being stubborn. I was listening to the interview he gave with Nicole.
Definitely different. Anabolic.
I understand the bearish case in this name. I think being overly bearish, though, at that point just gives you, I'd say, less grounds for your argument at that point.
You know, Jenny, downgrade schmoungrade is what Tesla stock said today. If you look at the 1 minute chart, you had about 90 seconds to buy that dip, and then it took off to the upside. So
At least you had profit chase holes.
I love
Well done.
the fact that this stock is so polarizing.
Choppy
because
day.
It makes people.
Unless if you time the
love
bottom
Elon Musk.
greatly.
They hate Elon Musk. He takes Twitter.
Wasn't a whole lot up to make today.
He does, things that aren't with the norm of to use my favorite Seinfeld line, he flouts society's conventions, Jenny. And by the way, the whole rest up thing, I do not believe you, Jenny. How about that? A summer weekend in Chicago, I do not believe you.
That's fair. That is fair. But I know, Kevin, I completely agree. And I almost think it's like for everyone that is supportive of Elon Musk, because there's then those that want to criticize him. And I almost love both camps equally as much because they sort of fuel each other. And it's almost like we can't stop talking about Elon Musk. So for that reason, I'm sure he probably would see it as him winning. But I also think when it comes down to Tesla, because of course it's hard to separate Twitter given the fact that he does own both companies, but I choose to look at the fundamentals of Tesla. In their report, things were fine. I mean, they talked about FSD, which is something that he admitted he's been too optimistic, too pushy about, but he gave a reasonable timeline for their FSD, which is then their robo-taxi. So that's something I think the bulls are excited about. He also hinted at the Cybertruck, which we now actually have production of. I mean, there were things in the development pipeline, I think, to get those bulls excited about as far as the long-term story of Tesla. I choose to focus on the fundamental story, less about the hype and the pro and the anti-Elon Musk narrative.
Yeah, definitely been hard to bet against.
3% on GME. The upside.
For the analyst that was on Nicole's show, and I heard it too, Jenny, who has the $24 price target. That's post stock split. What was his price target before the stock split?
I have no idea, but he's been a seller of this stock since he's been covering it.
It's been 24 forever, Kevin. So to me, you're being stubborn. You're not paying attention to the story.
Yeah, but then again, he's going off of data, and that's what he says, and it's all fundamentals. But you got to remember, you got that guy leading the company that's pretty much a genius. So hard to bet against him.
Yeah. He's Thomas Edison.
Yeah.
Let's put it that way. Yeah.
He might be. All right. Thanks to Jenny Horn, markets correspondent here on the network.
Or is Nikola Tesla?
Tesla downgrade having little impact to the downside on that stock.
Big Dish is at a high.
Alex Coffey, senior equities contributor.
Might find resistance there.
Alex, I kind of want to
if it doesn't, Dish might make a move.
Here today, S&P 500 up over 18%.
Got a nice long bottoming going on.
Rallying over 40% so far this year. It doesn't seem like a recession's in sight. What are you focused on this week out of the Fed to maybe kind of throw some water on this fire that's burning with equity markets at this point?
Well, I guess I don't anticipate the fire coming from the Fed.
Like this was the handle right here.
Going to get anything.
About 38.2% retracement.
The hawkish side. I don't think that they're going to come out and surprise the market, even if they outright said, "Hey, we're done raising rates," absent something massive, because that's kind of how the market's priced it.
DFLI up 14.
Essentially, that this is the end of rate hikes after this one that is currently 99.8% baked into the cake. Let's call it.
Blink's waking up 2.7%.
We're going to get it this week. I did look at a couple of the other meeting probabilities throughout the rest of the year. I think it was somewhere around 16% for September, gets to about 25% in November, and then it starts going back the other way. So the market seeing this now is basically a 3-to-1 probability that this is the final rate hike of this particular rate hiking cycle. And then subsequently next year, pretty high probability is that policy will work the other direction if it is to move. All that being said, this particular Fed has shown a consistency in wanting to leave themselves optionality. So I would suggest that I probably anticipate if there's going to be a movement in those odds, they would move to potentially from, let's say, 16% in September to maybe a third, maybe 50-50. If you're going to get a surprise, I don't think that there's anything they could say that provides any type of near certainty for anything in the next couple months. But the surprise to me leans hawkish, although I think that no matter really what happens, this will likely be the final rate hike that we get from the Fed.
Think about this, Kevin. So soft landing has come back into play, right? There's no recessionary fears out there at this point, and the Fed's told you that they'll do 2 more hikes. Nothing's broken, right? The job market's still robust at this point. Nothing's broken. So, a lot of people that are calling maybe that they hike a 1/4 of a basis point, that the market's basically priced in, that they go dovish on their commentary. How can they go dovish when inflation's still high?
Yeah, he won't go dovish.
No? Okay.
I don't think he'll go dovish at all. But remember, he won't go dovish in his statement. Some of the questions he may answer that may seem dovish, but I believe, and I talked about this with Alex this morning on the Future Show, it's what you do and it's what you say. I think there's two things. And he paused because, or if you remember his press conference, he said, I don't believe that rates have been restrictive for long enough yet to really see. And so I don't think I think he's concentrating on, you can do just as much work with rhetoric as you can by moving rates. and saying that,
yeah, that's true.
That tone that we're fighting inflation, blah, 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 you've heard it all before. I think he stays on that rhetoric, but I side with Alex. If you get the numbers that they're looking at for PCE, year-over-year headline from 3.8 to 3, core from 4.6 to 4.2, if you get those numbers on Friday and that's just the consensus, then they're done, Tom.
Yeah,
because that's moving quickly enough, and now you're starting to get the core to move down. Remember, it's been 4.6, 4.7 forever.
Right.
It seems like if that breaks to 4.2, which is the consensus, that's really good news.
Yeah, we've seen that trajectory where inflation's come in. You wonder how sticky it's going to be. I think those are going to be some of the questions. But maybe you should be hawkish because nothing's really broken the market at this point. But Alex, I kind of wanted to pivot back to earnings. I mean, what do you look at? Kevin kind of laid out, we've got everything from industrials to housing names, a couple more airlines. You got big cap tech in there. You've got everything across the board that you could want for earnings season. Is there anything, any sector, any names that you're focused on?
Yeah, I think the big three of the mega caps, no doubt, have my attention. You get Microsoft, which is as important a company as any. You get Meta, which has been, of course, a huge winner this year, and you get Alphabet. All three of those names have also been kind of cornerstone key, R&D into AI, which you can make an argument has been the primary reason for the rally. Whether or not it's been warranted or not is a discussion possibly for another program and another day. But the earnings haven't been robust. It's not like we have some massive earnings growth relative to where we've been. It's been a declining earnings story in terms of growth the last couple quarters for a lot of these names. So if they can't continue to, in some ways, navigate and catch lightning in a bottle with keeping the hype of AI alive, I don't see how those three companies don't have very comparable moves. And if you get three companies that together have, probably close to $5 trillion in market cap moving in the same direction, the market's going to move. And so I think that from just a broad macro participant standpoint, those three are going to, of course, catch my eye. Anytime you can have a market leader, a name that's a key piece in a particular industry. Some of the ones that come to mind in that space would be you get AT&T and Verizon, I believe, this week. They've been struggling collectively.
Yeah.
It's a super, hyper-specific part of the market. Their struggles don't necessarily antiquate and turn into struggles elsewhere. But seeing just broad struggles and then AI hype just sort of overshadow it, I think makes us think that, hey, things aren't slowing down, when in fact they are. The PMI data this morning was pretty disappointing. The most pessimistic outlook we've seen this year from purchasing managers and business leaders. There are still fears out there. I know that the soft landing narrative is dominant right now, but we're not out of the woods yet.
Yeah, I agree with you there. And to your point, American Express downgraded today, and that's based on Piper Sandler survey that's basically saying, okay, when they resume student loan payments, the next quarter or two is going to be pretty soft as far as the consumer. Kevin, is it exhaustion at this point? Because
you're guessing.
Yeah.
Right? When you say that about American Express, I get the first part, that student loans are going to reignite, and that's going to cause a problem. The question is, it's going to reduce spending. Well, you're guessing there. You don't know that.
Robust
right?
jobs market.
It's showing the economy has shown no signs that that's going to happen.
Right.
So it may not be as high as it is now, but I don't see any signs that the U.S. consumer is slowing. Couple little areas, but I mean, it can't go at the pace it is. It can't.
Yeah, that's true. And Alex, when you look at maybe crude oil getting back up to what, $78 a barrel now?
Yeah. Almost 79.
Yeah, 79. I mean, that might cause a little bit of a headwind moving forward, especially for some of these.
It's going to show up in the inflation data.
Inflation data, right? And that's backward looking a little bit. So,
well, I'll put it this way: I personally, inflation, it couldn't be further in the rearview mirror. I get it's a little bit above. I get it, but we just all agreed that for the most part, the Fed's probably done. They can talk tough, but the action now will be leaving rates where they're at, leaving policy tight, and not making it easier. That's a very different conversation than one where we're going from 0% rates to 5% rates, which was the story of last year. Mm-hmm. The worries for this market now are how bad does the economy get, or does it even get that much worse? And if anything, crude oil is painting a positive picture the last couple of days.
Right.
I think the weakness that we have seen so far 2023 was a reflection that the reopening in China was far overblown in terms of optimistic projections. But in the same way that we can swing the pendulum too far in optimism, we can swing it too far in pessimism. And I think that we also maybe saw a market that got a little bit over its skis in terms of how bad that the economy was maybe going to be at this point in time and in the immediate future. And I think we have a market that's repricing that demand right now. Again, I don't think we're out of the woods yet, but the further we push this out into time, things have to be repricing, because it's kind of that time right now. It's either we're going to bounce back or we're not going to bounce back. And I think that clock has began with this quarter.
Yeah, and especially with valuations so stretched and the major indices rallying so much in 2023, especially the S&P and NASDAQ 100. Let's take a quick break, guys. When we come back, we're going to take a look at Boeing. The aircraft maker has ground higher by by about 12% so far this year, and reports earnings on Wednesday morning. Coming right back.
Let's walk through charts, one of the most commonly used features on thinkorswim. Start by going to the Charts tab and entering a ticker symbol. Select time frame to adjust the time intervals or to favorite a time frame. Select style to change the appearance of the chart. You can add drawings by selecting Drawings, Drawing Tools, and then Type of Drawing. For symbol comparisons, select Studies. This also gives you access to hundreds of pre-built studies, including a number of classic patterns. The grid icon lets you view multiple charts at once. You can even initiate a trade from the Charts tab. Just right-click anywhere on the chart and select either buy or sell. For more demos on how to thinkorswim, head to the Education Center on tdameritrade.com.
When traders tell us how to make thinkorswim even better, we listen. Because platforms this innovative aren't just made for traders, they're made by them. thinkorswim Trading from TD Ameritrade.
It's a 13-hour flight. That's not a weekend trip.
15 minutes
Oh,
away.
wow, I gotta take off. Now, you downloaded the TD Ameritrade mobile app so you can quickly check the markets?
Yeah, actually, I'm taking one last look at my dashboard before we board.
Excellent. And you have thinkorswim mobile?
So I can finish analyzing the risk on this position.
You two are all set. Have a great flight.
Hey, thanks.
We'll see ya. Ah, they're getting so smart.
Choose the app that fits your investing style.
Welcome back to Fast Market here on the TD Ameritrade Network. Earnings season in full swing. One stock that's doing okay so far this year, that's Boeing. Shares are up about 34% from year-ago levels, up about 12% so far this year. Kevin, this is one of your names that you follow quite closely, Boeing.
I have a love-hate relationship, Tom. Let's be honest about what my relationship is with Boeing.
Backlog of nearly 5,000 airplanes, $400 billion. They did state that demand forecasts, they came out with this a couple months ago, demand forecasts for the next 20 years, 42,600 planes needed. Duopoly-based company here, but they've had some fits and starts over the last several years.
And it amazes me with all the problems that they've had, and they've had many. It's a long list, as you know. This whole cost overruns on fixed cost
Mullins spiking?
programs, like for the military and things like that, that they're losing billions on. How could that
What spikes?
Of all the problems that they had with
Let's see it.
their planes, which are well documented.
GME getting sold off there.
Billions of dollars, these defense contracts that you lock in the cost, and if you have overruns, you have to eat
Still
them.
up 2.5.
Apparently. My goodness, that's a terrible thing. But here's the good news. They expect by 2025, 2026 to have $10 billion in free cash flow, and that looks low in terms of their ability to get there quickly. I have the number, Tom, right now. The backlog at 3,650, just 737 MAXs on backlog. They deliver between 400 and 450 this year. Every time they deliver a plane, it's free cash flow, it's retiring debt, it's getting more healthy. This company has got a bright future. I just have no idea when they'll get there.
Yeah, picking up production. Alex, starting a new 737 MAX line. That's supposed to be coming online soon. But the demand's out there at this point, and they have one of the most cost-effective engines or planes as far as fuel usage also. So your thoughts here?
I mean, is there a company that has the easier road to success than a company like Boeing? One of your biggest customers is the U.S. Defense Department. You have one major competitor.
Yep.
And if you think about a company like Boeing, they have very strong partnerships with the domestic airlines here in the U.S. Like, they're not probably going to first choice be to go buy Airbus planes. So all you have to do is just deliver some planes and get some things. And, they've done their best to, make that difficult. And investors have certainly paid for it over the years. But some of the stuff that this company specifically has dealt with the last few years would have basically caused the ruin of many companies, but it shows just how strong and how critical this company is, that they've been able to weather that storm. And I know there was some stock price weakness, but it's been pretty robust even in spite of all of its own issues that it's dealt with. I've said this several times in the last few years, but if you were trying to teach someone macroeconomics, microeconomics, kind of just the dynamics of, hey, market-wide impact
Series come down.
versus company-specific
That's
risks.
quite the move on it, though.
Boeing can be the example for all of that, from the pandemic to its issues with the 737 MAX and all the volatility that we've seen. There will be portions of finance history books written about Boeing in the last 5-6 years, and it's not necessarily for a great reason, but we're bouncing back and we're getting through this here.
BBIG testing lows again.
It's going to be a story of, deliveries have been strong, revenues will be strong, but margins are being squeezed. And so some of the bright spots have been global services, which is going to be sort of their airplane repairs, has actually been pretty robust as airlines are bouncing back and electing to kind of repair fleets that they have as they get capacity back online. Deliveries are going to be nice, and they did deliver, I think it was like 11 of these planes, the 737 MAXs, which is good in terms of the inventory. But also, the story is going to be inflation's weighing on the company still. Supply chain has not completely worked its way out, particularly on the defense side. And so defense, for example, we might see a 5% growth in revenue, but you might see margins fall by 7%. Okay, that's not the recipe that you want to see. Is because you're growing revenue, but you're also growing costs at a faster rate. So profits probably going to fall. The estimates are showing it could be down as much as 400 million, or 370 million rather, to about 400 million, which is about a 2% margin versus a 4.6% margin. But it's Boeing, and it's still, this is one of those companies that, we used to say too big to fail or whatever with banks. I mean, this is too big to fail when it comes to industrial kind of a company in the fabric of the U.S.
Yep, and option markets pricing about a plus or minus $8.30 move. In
You're low there on BBIG.
Until
Breaking through
Wednesday
that support.
before the open, but I kind of wanted to get this in because we've got big names tomorrow that we'll cover on the show. But how did you want to look at this one for an example trade?
Yeah, so this is where, you know, kind of you have to think about how do you want to approach something. Because you just mentioned it's an earnings-related trade when you have earnings throughout the life of the trade. And so the first thing you consider is, do I want this to be binary around earnings? Do I want to just solely trade this earnings event? And in that event, if that's the case, then maybe you would look at something that expires Friday. Shortest term expiration, elect to remove the noise and stuff from beyond that and trade just around that. I elected to go to the August monthlies because I looked at Boeing's trading throughout the year in 2023, and it hasn't spent really any time below 195, and it hasn't spent really any time above 225. If I went out to August 18th, which is sort of in that 1 month wheelhouse, a little bit under that from now, I was able to structure an iron condor, which will still react to this earnings event. And if it's an unchanged earning event, it's likely that you could have sizable profits post earnings, even on something that expires in August. I elected to go that far out so that I could collect a reasonable credit on a $5 wide iron condor, but have those break evens basically in line with the lows of the year and the highs of the year, and creating an iron condor that sort of surrounds the trading action for all of the 7 months leading up till now. And so that's what we've done. The 195, 225 short strikes, $5 wide wings, 190, 230, $1.50 credit. Break evens in that case would be 193.5 and 226.5 on $350 in risk. So this is just one way to look at it. It takes a little bit of the sting out of the earnings because you could have a massive move and then you still have a few weeks after for it to work its way back into this range. But you're not going to get that same instant gratification that you would if you did a near-term premium selling strategy and there was no reaction. So there's always trade-offs.
Yeah, and implied volatility, even going into earnings, isn't that elevated. It's near 52-week lows in there. But let's break this one down. Selling 2 out of the money verticals creates this short iron condor strategy. Selling the 225 call, buying the 230 call. Selling the 195 put, buying the 190 put. So $5 wide short call vertical, $5 wide short put vertical. Collecting roughly about $1.50 credit. Might get closer to 160 right now. But you've got a nice wide range on this one, Kevin. With risk, if you collect 150, $350 per spread above 230 or below 190. And to Alex's point, this has been a tight range in 2023.
Yes, and Alex went a little bit outside the expected move in terms of the put side. A good, safe play in the environment that we find ourselves in. By the way, if you move this date up to this week, it's 80 cents.
Yeah.
So you can see it allows you a little more time for the stock to maybe move and then settle in. It's short a good fair amount of Vega. So if implied volatility comes down, it's short 6 Vega. So that'll make profits each point theoretically when they come down. So yeah, this
Sure
is
thing,
one
J
that
Souls.
allows
Yeah.
move, but it gives you
Yeah, that's on the.
theta that will only go
It's posting my entries and exits on just the theta farm though. It's not my long.
stay in that range.
The long stuff I just post on Discord and I tell you guys about.
Slammed to a halt.
The theta farm
Got up there.
I
And it's
don't disclose other than
managed
to those
stay,
members.
Pretty tightly above 200 for the next. So you've got a nice width here to hang out in.
Yeah, 25 days till expiration. You do have some assignment risk on those short, the short 225 call and the short 195 put into expiration over the next 3.5 weeks or so. But a good look at a neutral short iron condor in there and Boeing going into earnings. And thanks to Alex Coffey for joining us here today. But when we come back, we're going to take a look at Spotify. Stock's down pretty sharply today after announcing some repricing, a new pricing structure ahead of their earnings tomorrow.
And Spy's still chopping around here. I got stopped out of my short twice. So, really just boredom trades, waiting for something to set up. Not good. Not good to do. Gotta watch something else. Express kind of popped out there. Pac West up 6%. Open Door up 5. True Panion up 5. Big Lots up 5. Nordstrom up 5. Seeing the trend, all his retail's up. Beyond is up 4.4. Barbecue, super low volume, really liquid. Does say it's green though, 1.5%. But we'll see. Does look like it's actually using that as support now though. Look at that. It's very interesting. Breaking out of that and using that as support. Good sign. See where we end the day. Look at GME bouncing right on that level too. Weird candle. Looks like AMC's still kind of setting up a, well, could be set up a handle, or we're not going to get that. We're just chopping. It's not always that straightforward.
With all the things they're doing, raising prices, renegotiating some of the royalties that they're paying, plus adding more different ways, giving advertisers like a first, what pops up and music to pop up on your screen, they'll pay for that. So they're finding ways to raise revenue, and like you, Landon, I'm addicted to Spotify. It has completely replaced every kind of
Stocks
music
dropped
that I have in my
on barbecue.
So I think they're onto something here. Adding podcasts,
Doesn't seem like much was on.
better. But yeah, I see.
Not getting a
point.
market
I don't know
reaction.
why the stock is selling off when they're raising prices? By definition, that's going to bring in more revenue.
Right, exactly. And you know, we always talked about Spotify. You mentioned podcasts. They're the leader in podcasts, and we've seen a huge uptick in podcasts over the last few years. And they just competed well in the music category. They dominated podcasting, but they competed well in music. But now I think they're really starting to turn it up in the music category. So they still have podcast domination, but now they're getting that music category where they're really starting to get into the dominant phase of things as well with their AI that's got that sort of a mix that they create each year for you, and their ability to create, I think it's like an automated DJ or something like that. I've got some friends that use it that are addicted to it, but everyone just is amazed at how well they can predict which songs you're going to like based on the other ones that you like. So I really think it's a very strong technology. They've got a user base that's in love, and $1 just doesn't seem like it's going to push people away. I mean, if you're paying $9.99 and now you're supposed to pay $10.99, are you really going to cancel your service? I think they're just going to get a 8 to 10% boost in revenue because, and it's just I don't know. I just don't see it. Maybe Tom could fill us in on why the stock is selling off 5%. Do you have any idea? Are we just on the wrong side of things here, guys?
Well, I think it's more of a concern because this is a premium subscriber base anyway, right? So there's concerns about subscriber numbers on that. It's not the ad supported one. They've got over 200 million on the premium services. So I think the run up that we've had already and potentially seeing a pullback. I mean, we saw this early on with Netflix when they raised prices, subscribers got hurt. Now they all came back and figured that out. But I think that's the concern here for Spotify is the fact that it's a part of their base, just over 200 million subscribers, but what kind of attrition are they going to see due to the dollar? I mean, it's $1, right? But, that could cause some people to cancel or maybe slip back down to the ad tier level of their subscriber offerings at this point. So maybe that's the concern here. But Landon, when you look at this, going into earnings, the over 100% run up that we've seen so far this year, what kind of earnings score are you giving this one?
Sure. We also keep in mind the recent pullback, right? We saw that with Netflix. Like we were bearish going into Netflix and it ran up huge, and that just made us like it even more. We're up plus 17 on Spotify. Now that score was calculated on Friday. We always put our earnings sheet out on Sunday, so it's calculated on Friday. With this move today, I think it might get up a little into that bullish range. 20 is sort of always the cutoff. So I think you could talk yourself into a trade on this one on the bullish side just because of this sell-off. And we've seen it in the past. The last report in April was a kind of a pop and drop. Didn't really go anywhere over the week. But the one in January was a pop and run, and it went up about 20% for that week. So this stock has the move in. I think it's a 9% expected move. It's down 5% today. So it's making a lot of that move already. And if the CEO can put rosy glasses or rosy report on this increase, I think, you might see some good numbers out of them. I wouldn't be surprised if they upticked a little bit here. So officially we're plus 17, which would be a neutral, almost bullish play. But given the fact that it's sold off a little bit, I'd be willing to take a bet.
Yeah, the company expecting 530 monthly active users overall, and that's including the 200 million plus premium subscribers. All right, Landon, great data as always. Have a great day.
Thanks, guys. Take care.
All right, that's Landon Swan, co-founder at Likefolio, breaking that down for us. Kevin, he mentioned it. It's a pullback. This stock has not traded below its 50-day moving average all year. It's getting close.
Yeah. Now, this is another one of those. And guys, follow me to the Thinkorswim chart here. You can see the 1-year chart, right? Looks pretty impressive, and there's a sell-off. It's breaking back towards the 50-day moving average. But expand this out to a 3-year, and it looks a lot different, Tom. It tells a different story. This had a high move of 387, and now, even with this rally, it's $162. So, you got to do that a lot this earnings season. You look at the 1-year chart, but then you got to look at the 3-year chart because it tells a different story in this name. And so if they start to get this right, and Tom, they are now becoming the go-to place. How do I know that? when new albums drop, when new music drops, what is it? Coming on Spotify at midnight, right? That's the new term. It's not, oh, a new album goes to the stores on Monday. No, it drops on Spotify at midnight.
Yeah.
So it's becoming the new place. And why does that matter, Tom? Because eventually they're going to have to see. They pay massive amounts of their revenue to the music labels. They're going to be able to negotiate that down eventually if they become, more and more popular, and they're about to renegotiate that.
Yeah.
So that's more money in their pocket if they pay out less. So yeah, that's why I think not only raising prices but also renegotiating their contracts is good for Spotify.
All right, so you got an example trade for us.
Got an example trade. That being said, I have no idea where the stock is going.
I'm supposed to go up or down 15 and a half bucks.
Exactly. So what I did here, Tom, is I stayed in the double calendar, right, and give myself an opportunity. It's pretty low net debit to do this here, around 50 cents. It's ticking between 50 and 55 cents, Tom. But you can do the 180 call calendar, just 1 week. July 28th, August 4th call calendar, or you can do the put calendar if you think it's going to continue on the downside. Both trading right now around 55 cents, Tom. So this is a very inexpensive way. You can do one, you can do the other, or you can do both. It's collecting fair amount of theoretical theta. It's extremely flat if you space it out. Look where the stock is. Look at the expected move in either direction. It's right around those numbers. You can adjust them if you want, but I made it pretty easy for the sake of this show. 180 and 150.
Yep. Let's break this down. So we'll start with the put calendar here. Just 1 week wide, buying the August 4th weekly 150 put, selling the near term July 28th weekly 150 put, and then on the call side, buying the August 4th 180 call and selling that same strike in the July 28th. You're paying roughly for this double calendar position $1.10 debit. There's going to be your risk, $110 per spread on that. But Kev, if you look at your break evens on this type of trade, it's probably right around 140, just maybe a little lower than that, and all the way up near $200, where you have a nice wide range where this stock can trade over the next 11 days, where you can potentially be profitable. Now, ideal, the stock goes right to either 150 or up to 180 post earnings, but with the stock trading 162, you've got that one standard deviation move in there. Now, you do have some assignment risk on those short options that expire in 4 days, so keep that in mind. But a good look at, hey, I don't have to pick a direction. If I think it's going to move, I can pick a double calendar, or, as you mentioned, you can pick one or the other based on your assumption.
And you can move those strikes in a little or out. Of damage from NVIDIA last quarter. So if you think it may move bigger, then this is not the trade. Remember, all you have at risk is the debit here on this trade. So it's not a big number. But if you think you could move bigger, remember, it's something in another spread.
Right. It's only 193 million shares outstanding.
Yeah.
So
it could be prone to maybe a bigger move, a larger move.
Not a small float.
Right.
But not
Spotify, wow, that's pretty small.
The imagination.
Right. We've seen smaller, but we've seen a lot bigger float.
Yeah, that's right. All right, Kev, let's take a quick break. When we come back, we're going to take a look at another stock that reports earnings tomorrow morning. That's 3M, down about 13% so far this year.
Up, just popped a little bit, down 6% on the day. Might be a nice entry on up. But quite the rally.
lower today, despite that upgrade, which came from a pretty positive note. So the analyst who upgraded this stock to an outperform from a neutral and raised the price target to $500, that's around a 17% move to the upside from where it's trading today. Now, this analyst over at Baird actually said that where the stock price sits right now is an attractive entry point, since we saw a little bit further down in the stock over the past couple of sessions. On Thursday, Netflix fell around 8.4%. Friday, it fell another 2.3%. And now this analyst saying is the time to buy this stock. But there are also a few other things that make it look attractive on a longer term. The analyst says that it's also seeing that modest pullback strengthening the long-term investment case. And the analyst has increased confidence in the company's execution around those new initiatives. We're talking about the crackdown on passwords and the new ad tiered option as well, and more people buying into that. And so the analyst believes that Netflix is strengthening its financial profile right now, and that should even further improve investor sentiment on this stock. So they say, though, that the stock's valuation is admittedly rich, but it's warranted given the company's underlying momentum and the unique qualities of the business.
Yeah, this stock's pulled back about 3% so far this month. We'll see if it can right the ship, though. But weak on an upgrade. All right, Renita, appreciate it. That's Renita Young, markets contributor here, breaking down the Netflix story. But now let's welcome in George Tillis, senior markets correspondent here on the network. George, we're talking 3M. Kind of wanted to hit this one going into earnings because they've had a lot of contention as far as the stock price goes. It's negative. They've got some lawsuits in multiple different areas here. I mean, is there no resuscitation for 3M going into these results, because it just seems like they've got this black cloud hanging over them?
They do. I mean, there's been a lot of litigation, and they actually agreed in a settlement to pay about $10.5 billion over the next 13 years to deal with some of these what are called forever chemicals that have, of course, been pinpointed or alluded to creating cancer issues, but also some environmental issues. And they also have another lawsuit from the Veterans Administration affiliated with hearing loss associated with some of their earplugs, which again were utilized during combat, because they do, of course, make materials that are safety and industrial based, but also transportation electronics, as we know. Everything from Scotch tape to N95 masks, which we know altogether have been down in demand since the pandemic, but nonetheless, the litigation has been a real big overhang for 3M. Now, one of the things you have to keep in mind is the stock is down about 20 or so percent over the last year, but even over the last 5 years, the stock is down about 48%. So there's been a significant decline as the multiple or the PE ratio has compressed significantly. It's trading around 12 times forward earnings, where typically it's around 18 times. So it's already trading at a discount. And looking at the quarter, they're going to be reporting tomorrow morning prior to the bell opening. The estimates for earnings is $1.65. Now that's down 33% compared to the same quarter last year at $2.48. And even sequentially, last quarter, they earned about $1.97. Now, the other thing is the sales are also expected to be down year over year from 8.7 last year for the same quarter down to 7.95. So that's at about an 8% decline estimates for 3M. So it looks like their quarter is expected to be significantly lower compared to last year, also sequentially. I think the settlement might be a little bit of an overhang that has been putting pressure on the shares for 3M. But there are some financial concerns associated with the dividend right now. Now, they're paying about $6 a share in dividends, which is about 68% of their total net income. And one of the things about the settlement that they proposed or agreed on, there's some concerns about issuing debt to pay that down. They don't have a lot of cash. They have about $4 billion in cash. So what they're doing is they're paying quite a bit of a dividend. They don't necessarily have enough cash to cover the settlement. They have been buying back shares, so that's another thing that has at least sort of supported the share price. But there are some concerns about either a dividend cut or potentially issuing more debt to pay down those settlements, while at the same time sales and earnings growth has been decelerating.
Yeah, George, when I look at the stock price here, is this one of those quarters that might, hey, we're going to rip off the Band-Aid? You mentioned, the threat of the dividend getting cut here, and every company has that, but for this one a little bit more. Is that maybe setting us up for a potential big move real quick?
It possibly could. I suggest this may be a quarter where we may end up seeing sort of this washout decline, and then of course a retracement back to the upside. I mean, it's been a long story for 3M. The stock has been punished over the last 5 years. The other catalyst that may help shore up the balance sheet is the spinoff of their healthcare business. Some estimates have it around $6.8 to $7 billion. So they do have the ability to raise cash. But at the same time, that'll certainly contract their revenue base, which on an annualized basis is about $33 billion. So I think this might be a washout quarter for 3M because effectively, when the litigation passes and there's some more clarity in terms of the costs and expenses going forward, a lot of times we see major trend reversals, at the very least looking at the weekly charts.
All right, great stuff. Great breakdown here of 3M going into those earnings. Thanks to George Tillis, senior markets correspondent here, breaking that down. So, Kev, I looked at a strategy. We talked about short iron condor with Alex earlier today on the first segment when we covered Boeing. He sold it, right? You've got to wait for that thing to contract in price. I looked at the opposite, because the option market's pricing at about a $3.80 move either way in the shares. It seems like implied volatility is really low. They're not expecting a big move. What if they do have that rip off the Band-Aid quarter? What if they say a spinoff? What if they cut the dividend? I mean, there's a lot out here. So I looked at a long iron condor that takes advantage of a move, and you'll want to move, right? But I went out to the August 4th weekly cycle. So 11 days till expiration, not a complete earnings play, where I'm going to buy a call vertical, buy the 108, 111 call vertical, and then against that, buy a put vertical, buy the 101 put, sell the 98 put. So you're buying a $3 wide call vertical, buying a $3 wide put vertical, paying roughly about $1.20 debit. That's going to be your risk, $120. Your potential reward could be $180 per spread if it's outside of 98 and above 111 at expiration. But Kevin, this takes advantage. The debit you pay, the $1.20, $120 per spread is your risk, but it's pretty good risk reward setup, and you don't need, just over a 1 standard deviation move in the shares.
Fitting the right strategy to your opinion is what we try to educate people to do here. Having that menu, I think you could make a big move. I don't know which direction. That's this.
Right.
If you think it's range bound, that's Alex's trade. Right. If you think you have an idea where it could go, like in line with the expected move, that's the calendar. Whatever your opinion is, try to match the strategy to that, so you don't do a right church, wrong pew kind of thing, right? And so
Express
there's
is
risk on this.
still kind of ripping,
Risk is if the
17%.
stock doesn't move. The good news is if the stock makes a massive move, right, which it can, and it has, you're set up for that correctly.
Right, and you've got 11 days till expiration on this. Break evens where you want it to go below 99.80 on the downside, where you want it to go above 109.20 on the upside. I mentioned stock has been under pressure so far this year, but you're just playing.
Thanks, guys, for your likes today. I appreciate it.
A big move.
5 minutes to 1 o'clock.
And by buying an iron
At
condor,
36 on the day.
Short iron condor, you can actually adjust or manage this trade early if
Barbecue's
you
at
want.
32 cents, up 1.5.
Sure. I mean, no one says
BBIG
if
up
you think it's a big
30%.
move, you can
Or
make another
35.
trade. You can sell out to put vertical if it's the upside. Sell out to call vertical.
GME
if
kind of
it's the
sold
downside.
back off.
And then let the one side
Up
that you're right on
1.8.
run.
AMC
Or
kind of moving back up
you
to the
can sell
highs.
the winner on the
Almost
upside
30% on
and
that
wait
too
on
now.
the one that's not. I mean,
If it
there's
reverses and goes lower, and then
Exactly.
sell the put if you already sold the call vertical.
Yeah, there's a lot of ways you can adjust this or trade it, but you've got a base on of a trade that does better in a big move.
Yep, and you got to make sure market's open, liquidity is provided also. All right, Kev, that's going to do it for you and I today here at Fast Market. But stick around right here on the TD Ameritrade Network. Next Gen Investing is coming up.
Yeah, AMC bounced pretty good. Oh, there you go, new high of the day. Did a shallow handle there, but did end up making that handle with that double bottom. I made a handle and then double bottomed on it. See if you can break out here. There you go. Nice, yeah. AMC's moving up. High of the day, 35%. Got $6 for resistance, 610, 675, 750, 780. A lot of upside with how big that pre-market was. Only hit 10 cents. Yeah, seems like it probably will. On its way, it's well on its way. Back to the 10s. AMC. Back to the new high. AMC looks like it wants to hold, maybe. Yeah, there you go. AMC starting to go. New high of the day there on AMC. 59.50. Like SPY. Still chopping around, but might be ready to drop. Got VWAP. Breakthrough first. AMC still hanging out the highs. Hey Guts. Morning, afternoon. Having a good day. Updates on BBIG purchasing. So those calls I shorted on Friday, I tried to close them out this morning because I was actually up on them this morning a little bit. I was just greedy on my fill. I wasn't sure if it was going to run or not, so just wanted to get out of them, and never filled. And I broke that. I didn't want to chase the premium, so left my covered calls on those shares. But to hedge, I just bought more shares. So I bought more shares up here though. So did this bull flag, and then on the break of that 41 cents or $4.01, I bought more shares to hedge shorts. So we'll see. Averaged up on my share price, but now have bigger position in some that are uncovered. That's all I've done. Yeah, haven't sold anything. I mean, you could say I realized some gains when I shorted the calls yesterday, but yeah. Have a good day though. How about you? Yeah, AMC's looking good. It's looking like it wants to hold this breakout.
Well above where we're currently trading at just around $4.25 a share. Now, Baird did say the constructive stance is driven by increased confidence in the company's execution around new initiatives like advertising and paid sharing, as well as its strengthening financial profile that should further improve investor sentiment over time. They said that the near-term
earnings run up on
expectations
EPS?
being better calibrated following their
Oops.
second quarter print, and this modest share pullback has provided an attractive entry point into a strengthening
Got a gap fill up there. You got
investment
earnings.
case.
Could
They
very
do
well fill
admit
that gap
the
first.
valuation is very rich from here, but this warrant is
Green
warranted
candle on
given the
SPY there,
company's
still
underlying
chopping.
momentum and unique qualities of its business, they said. So, I mean, that's
I don't
enough
think
to
there are
say
any
it's
hearings
confirmed
today.
Following a bloodbath in
Sure, if
shares,
there are,
of
you'll
course,
be
in
around, though,
reaction to their
Jerry.
second quarter numbers that just showed, we discussed this last week, they just showed signs of a less growth-heavy Netflix. We still saw really strong numbers, really saw strong subscribers, just not the same monster growth metrics on a year-over-year basis we once were accustomed to in Netflix shares.
You know, I would love to give this analyst some truth serum and really pick their brain, because they say a lot of things here that are contradictive, and I don't mean to pick on them, but how can the valuation be
Yeah, Baba's had a
admittedly
nice little
rich,
run today.
as it says in quote, and this is an attractive entry point? Doesn't make any sense.
Nice.
So,
Nice
when
guts,
I
yeah.
look at this, what I see is an
AMC
analyst that
premiums are
was
super high,
a
so
little stubborn,
gotta be
had
careful
that
holding
low
those too
price
long.
target, had the neutral
Especially weeklies.
rating. The stock's done really well.
Oh,
It made it through
518
earnings,
calls
even with the downside
for next year.
And this is a chance for them to quietly reassess the stock.
$6 on
and
AMC
say, hey,
there.
look, we're outperform, even though the stock just went from 150 to 450, and we were at neutral. Now we're outperform. I don't know. It doesn't add up to me. I'm not a fan of this, but we'll see. Maybe they
518
just
calls
changed their tune.
Friday.
As they said, it's the advertisement and the
What does that
crackdown on
mean?
password sharing that suddenly makes them like this stock more after the disappointing earnings. Time will tell where things go. We got 425 in Netflix after a pretty brutal last week of selling post earnings. Jenny, let's do our best to narrow these down. I think the AMC story, as much as it's fun to talk about, at $6, you're in it or you're not. I don't know how much strategy there's involved in this. It's up 35% today. That's kind of what you're hoping for, I think, if you're involved with AMC. So of the other three, what are we thinking?
You know, so I think we have to look more at Microsoft because they still have earnings. And Netflix, I'm sort of, straying away from because we already got their earnings. So we look at Netflix enough. We looked at them enough last week. I'm a little burned out on all things Netflix, at least technicals. And then NVIDIA has been such a fun one to watch, just considering the fact that they just continue to rip higher, Alex.
No doubt. I think it's an AI theme as well. We know Microsoft is one of the main
Why do you
names
think that,
from a
Dink?
research standpoint and an investment standpoint. And we got NVIDIA on the other side, Jenny, providing all the stuff you need to do it. So
Oh,
just
818.
happily providing those chips and things that you need
at least got some time.
to get artificial intelligence up and running.
And if we see positive or less than positive results from some of these AI names reporting this week, we could also see NVIDIA slightly react. So we'll have to obviously wait and see on what is a very earnings-heavy week. So we'll be moving forward with our two upvotes today, those being Microsoft as well as NVIDIA. We'll be looking at the technicals in both of those names, as well as some example trades. Stick around. Next Gen Investing. We'll be right back.
Got Express up 12.5.
list. Let's start with NVIDIA. I mean, I don't even think it's debatable at this point. Is the stock of 2023 at the halfway point?
And we have news so frequently on NVIDIA. It's been a fun one to discuss because every single day there's new analyst coverage, and it usually feels like it's pretty optimistic. So I like to talk names that are optimistic, at least from an analyst perspective. So here to tell us now more on the technicals behind NVIDIA, I'd like to welcome in our chart master, Rick Ducat. So Rick, walk us through what you're seeing. This has been a relatively clear uptrend, no doubt about it. Shows up 300% off their 52-week low.
Clear uptrend indeed. We're up over 300% from our lows that we reached back in September, I believe. So up 46% alone since our last earnings event. So it's been really one for the record books here, and we can see that we have been traveling in an upward channel ever since that last earnings event. Noted by those two white dashed lines there. We can see we've got a shallower uptrend going across the lows with our purple dashed line there that we've outpaced significantly at this point here. We gapped up a bit today, but we're not really making a lot of progress here. We're basically just pretty close to where we opened here. So overall, not seeing much of a warning for the trend, but that could change if we get too much lower. So far, it seems like, we're just kind of pulling back to a reasonable level here. And there's quite a bit of support right by where we are now. We've got our old highs from 440. We've got our yellow 21-day exponential moving average near 437. And we've got our trend line that began with our post-earnings lows there and trending upward. So really, there's quite a bit of a confluence there to potentially break any fall. But if we do start to break below it, it could be dangerous. If there's not a ton of support nearby that point. We can see some clear volume nodes that have formed. The volume node near perhaps 425 would be a point to be potentially watching if we do start to pull back like that. But I think probably more traders are worried about where the upside move could start to slow rather than any kind of larger scale give back here. So we can see that we did top out most recently near our +1 standard deviation channel. That's one standard deviation away from our blue linear regression line, our line of best fit based on closing prices. And that was also pretty close to the top of our channel as well. So we've also got the luxury of not only a clear support point, but a clear resistance point to watch as well. Momentum favoring the bears right now in the very short term. But we're still above that 50 midline. We did break out of that overbought area and we slipped below. So that was a bearish signal. If we start to break lower, look for RSI to break below that 50 midline and price to break below support at the same time. That would be some confirmatory price action and indicator action there. So support and resistance, like I said, the area around 440 to perhaps 437 or so would be a key support point to watch. We've got our moving average, our trend line, and our old highs, and the start of our gap too, really. And to the upside, resistance would be at the confluence of our old closing high and our +1 standard deviation channel near about 475.
So considering, this name, Rick, objectively has been one of the most clear bullish names we've seen from a technical and fundamental perspective this year. I think that this name, it's hard to argue with some of the positive price activity we've seen at this point. So when trading this name now here, Alex, considering the fact that things are relatively all clear, all positive with NVIDIA, we also have some time ahead of their next earnings release. So there's that catalyst that is somewhat off the table, at least for the next month or so. Walk us through the name more bullish leaning example trade.
Yeah, this one's tough. It moves around a ton. It's super active. It's high volatility, and it's got earnings sort of in that longer dated time frame. So what I looked at here, Jenny, was something it's quite binary in the sense that it's very, very narrow. It's seeking to reduce the amount of exposure as much as possible, but still take a bullish position on the stock, as so many investors are probably looking for a way to do that given its run, given its role in AI, and given the fact that it's just so active and it's such a popular trading stock right now. And so with that, what I've looked at here was buying a call vertical. At the time, the stock was trading about $1 higher, so bear that in mind. At the time, we were buying the first in-the-money strike in the August expiration, which at the time, again, was 447.5. We then elected to sell the very first out-of-the-money strike, creating a call vertical at the 450 strike. looking to spend about one half.
Looks
the
like
width of the
BBIG
strike,
wants
so
to
it's
move back
a
up to
$2.5
VWAP.
wide spread. If we spend $1.25,
Yeah,
we have
AMC broke
$125
6.
in risk to make
61.50.
$125 in profit. The break even, then you simply add that $1.25 to that 447.5, and you got to 448.75.
Lots of room still to get that pre-market high.
It's only giving this stock about a $2.5 wide range. On a $450 stock, there, give or take, that moves around a lot. It's extremely likely that if this stock is to move higher from here, it would be above 450. And if it's to move lower, it will stay below 447.5. It is likely an all or nothing type of a strategy because the amount of window, given the volatility of the name, given its time to expiration, is unlikely that it would stay in this small area. So you're risking 125 to make 125 on what is possibly kind of a binary situation. It's either hoping for the stock to go higher, or it will lose if the stock goes lower. So I think that's kind of nice. We don't look at a lot of strategies that are kind of as cut and dry as this. But of course, above 450, both options would be in the money. The anticipation would be for those to go through assignment and exercise. That's your max profit scenario, offsetting for 125, not accounting for transaction fees. And then to the downside, these options expiring worthless. That's your worst case scenario. That's where you lose that investment of $1.25 or 125 bucks, and of course any transaction fees. That takes place below 447.5, assuming those options expired worthless at that point. So pretty straightforward, nothing too fancy here, Jenny. Trying to make a more expensive name at nearly 450 bucks a share a little bit more accessible while still taking some relative exposure.
And I think right now that's the key with NVIDIA shares is everyone's looking to get in at the most attractive entry point. But considering the rip we've been on, it's been difficult to gauge where we bottom or where we even could see the top. I mean, I think that momentum has been very difficult to call this year. But now to shift gears here and look at Microsoft shares, which are modestly higher on the day, about 0.3%. They have earnings tomorrow after the closing bell, Rick. So walk us through what you're seeing as far as the technicals go.
Well, it's pretty interesting when we have a 61% move off the yearly lows, and that's the relatively bad one. It doesn't even compare to Nvidia, but it's kind of in a class of itself at this point. But nevertheless, very strong move up on the year, pretty much just straight up since those yearly lows.
Yeah, PacWest has been doing well.
You can see that a little bit
New
of
settlement dilution
today,
plan.
though, where
Also
we
bullish
broke
news.
above that +1 standard deviation channel recently, but we were treated back to the yellow 21-day exponential moving average there, and not a whole lot happening today.
Yep,
We're up
AMC still
about
climbing up.
0.3% or so.
One level at a time.
We did test our yellow 21-day EMA again, but we're hanging on above it. It looks like
Wow,
we're
yeah,
still pretty
PacWest
close to our
8%
trend
now.
line as well. So kind of
Big
on the
pre-earnings
verge,
run up.
a potential tipping point very close by here, but not.
You're not going to
tipping
run covered
just
calls
yet. We can see
into
as
earnings.
well that where there's a rather notable volume node right around the 336 level or so. That could be a point where
Big
price
large
retreats
EPS
to. We
customers
could
are
see
chain
some
effects.
consolidation
Wow.
around that point if things start to fall off. But really, we
Happy
we
Money Monday
haven't
to you,
seen
Psych.
that start to happen yet.
Psych you up.
Nevertheless, our yellow 21-day EMA is starting.
He's
to
just
flatten out.
speculating
That
on what
could
the
be an
judge will come
early
out with,
warning
Cameron.
sign of that this trend could be getting ready to shift here. But really, we'd want to see some other confirmatory evidence first. Looking at our RSI, we did get a
You
bearish
got earnings
signal
after
on
hours,
that
I
one
think.
as well. We got a cross below our overbought area. That's our threshold of 70.
New core plan. Oh, from
denotes when the
Saturday?
stock is making a relatively strong move to the upside. And like I said, it's a bearish signal to cross below that after you've crossed above it. So would want to be keeping a close eye on momentum here. If momentum starts to worsen anymore, we could see a cross below that 50 line. That would be another bearish signal, and be on the lookout if that happens at the same time as a break below support in price, similar to our last name as we were saying. So support, that's the first level would be our 21-day EMA in yellow near the 341.66 mark. That's about where it is right now. Below that 329, that was about where things bottomed out during our last downward excursion below that trend line. To the upside, we would see, I marked our best closing prices on updates, 348.10 and 359.49. Those were the points to beat here. And those intraday highs were all the way almost to 367. So that could be another point to watch as well going forward in this name. We're still quite far away from that +2 standard deviation channel. That could be an eventual target as well if things do keep trending to the upside as strongly as they have been. Alex and Jenny.
Yeah, and this name touching all-time highs last week. It's one of the few names we discussed that is not even near its 52-week. It's near those all-time highs. So really positive momentum in Microsoft. Hard to argue with this one as well. Looking a lot like NVIDIA, but like Alex said, wasn't beaten as down as badly in 2022, which is perhaps giving the bulls some room to run here. But we will leave it there. Appreciate the breakdown, as always, Rick Ducat, our chart master. So again, Alex, difficult to I'd say, find some downside in Microsoft's chart. It's been a relatively strong name all year long. Up over 40%, though, not the same degree to the upside as we've seen in NVIDIA. So walk us through what you're seeing now in terms of another bullish example trade.
So we got earnings this week, Jenny. Any strategies on the table, right, depending on what your outlook would be for the stock. I had a kind of specific one I wanted to explore to kind of have a little bit of fun with this. Of course, selling premium, selling put vertical, selling call vertical, or an iron condor is sort of the standard sort of consideration whenever looking at an earnings related trade. But I wanted to look at something, and this could be adjusted based off of a different investor or trader's outlook for a name, but something that would benefit a little bit greater in the event that this stock were to do something specific. In this case, I wanted to look at what if it just retested some of those levels that we had seen briefly to the upside. So middle of June, we ran up to just above 350, and then the stock fell. Of course, this last run up, and just a week ago, we got up to about 366, and then it fell and kind of hung out around that 350 level before breaking a little bit below again. I looked at a strategy, skewed call butterfly, in which we buy an in-the-money 340 call, sell 2 of the 352.5 calls, and then buy 1 of the 355 calls. So $12.50 wide spread, $2.50 wide spread, creating a debit of $4.50. Break even is $344.50, pretty much in line with the current share price. This was by design. I wanted to create something that had a break even relatively close to the current share price, but still defined risk, but one that could make a little bit more than that on the upside in the event that this stock, of course, rallied and went higher, and we were actually right in our projections. And so the best case scenario for this name or this particular strategy would be a move to the short strike, but no further. So if we look at that risk profile, what you'll see is a move to 352.5 is where the apex of the profitability graph would be. The reason that is because that's where the debit spread, that $12.50 wide debit spread, can expand all the way to 12.5. So that would be an $800 max profit, but that short credit spread wouldn't be working against you at all. And so that creates the best case scenario. However, the stock can, of course, run beyond that, and in the event that that happens, you do stand to give back upwards of $250 of that profit potential. So it would level off then around $550 if this stock were just go straight to the upside, break through, possibly retest those all-time highs and stay there. So that's above 355. Best case, right to 352.5. And of course, worst case would be a move lower, and a move below 340 is your max loss potential of 450, or whatever the debit's spent. Again, we're analyzing this with a 450 debit. But of course, Jenny, that should be expected. If you do something directional, do something specific, and it doesn't do that, you should expect that that trade would not be profitable and would take some risk. That is why there is a potential for reward. And so with this one, though, the one thing I think that is nice is it is fairly short term. So, of course, this expires Friday, but also it has defined risk. In the event that, let's say, Microsoft loses 10% of its value, for example, a shareholder would experience that full 10%, even if they own the shares outright in terms of their value. This would be limited to the debit spent. And so $450 is the worst case scenario, no matter what happens.
And the market is pricing in around a $17 move in either direction. So the market is anticipating this to be a pretty major move for Microsoft. We'll obviously have to wait and see once we get those results tomorrow after the closing bell. But also important to keep in mind for both of our example trades today, they do contain multiple legs that can lead to multiple transaction fees. Short options could be assigned at any time, and carrying option positions into expiration can add risk, like unanticipated exercise or assignment. Now, coming up next, we will look at the massive rebrand that we're seeing to Twitter that happened over the weekend. brand now being called X as Elon Musk looks to transform the company. We'll discuss more what that means with Kevin Green coming up next.
Hey, JT. Yeah, we've been watching Tough a little bit. Looks like it's in a reverse split squeeze. Hit that solid resistance today. For a full pullback and some support. I mean, it's a sketchy trade for sure. So probably more suitable for day trading. And with that, you just need to know what it's doing right then. So 122.4 would be a 50% retracement. But of course, you have that gap all the way down there at 91 cents, which would still be within the fib retracements. I didn't hear of any real catalyst for this. I just assumed it was some kind of reverse split squeeze, closing shorts for whatever reason around reverse splits. Intraday, yeah, you just broke below that bull flag, which isn't good. So you got a bull flag, now it's broken. Now you're looking at an inverse cup on the day, potentially. If it does make it back down to the open. AMC rejecting that high. Not ready for it.
Messaging and payments and banking, which I find very interesting. And so we are seeing this rollout now. We have seen it on like the web application in itself, but some users may have not seen any updates to their mobile experience. And he does actually intend to kind of go away from the Twitter brand in general, not even calling them tweets anymore, apparently calling them X's and trying to come up with new jargon and lingo for the platform. So this is going to be an interesting change, to say the least. X.com does go to Twitter.com at this point in time. Jenny, I would be very cautious to say that they would actually just break the Twitter domain name just because of the SEO or the search engine optimization value that it has. But we've seen crazier things happen over the last couple of months when it comes to Elon and this Twitter saga. So let's see how this is going to pan out.
And I think to say that Elon Musk makes a vast decision and then everyone else just runs with it is a pretty accurate way to depict this entire business now at this point. And I think it's interesting they're saying that the X embodies the imperfections in us all, because X is to me like the most symmetrical of all of the letters in the alphabet. I feel very oddly about that, but we'll leave it there. Appreciate the breakdown on all things Twitter/now X, which it's going to take a while to make that jump officially. Kevin Green, senior markets correspondent. Now I'd like to bring back in Alex, and it's time for FOMO. So we are looking at Shopify, which it's not the first time we've discussed this name as of late, Alex. It's been on a nice run. It's now up over 80% year to date.
Yeah, this is an important name. It kind of powers the infrastructure behind a lot of small and medium-sized online businesses. The more that you can kind of get a standardized experience, I think that's a benefit for the consumer. Of course, it also helps the businesses get things up and running as well and really reduce those costs. And it was a huge game changer during the pandemic for many companies, and really helped us be able to get things that we needed. And as potentially small and medium-sized business owners saw an opportunity to get those things to their potential consumers, brings something that used to maybe be a corner store that only local customers could actually go to. Potentially international, potentially fully within the domestic population. So I think these are the kind of companies that have been important. How to value them, that's a bit a tougher question.
I might want to rally.
Did their best to kind of
rally.
Right, exactly.
Still chopping though. BBIG moving up a little bit.
Nathanson upgrading shares to outperform from
AMC holding above that breakout.
Price target, which would imply about 17% upside from where we're currently
Pause.
trading. But the
Moving up to
analysts does
VWAP a
expect
bit.
now Shopify
Express.
to gain increasing
Full
traction
flagging over
with its
VWAP.
enterprise customers going forward, and also did say that some early signs
Little
suggest
green
the
candle on
transition
top.
in this enterprise is already
Yeah, DFLI
underway.
was
They
looking
did say
good.
while Wall Street was distracted by the pitfalls
Doing
of Shopify's fulfillment network, the
10%
company did
consolidation.
deploy a series of product improvements, making Shopify Plus a more attractive e-commerce solution now to the enterprise. The firm's research, they also said, suggests that Shopify is in the
At 118, you want to sell your good faith violation. Oh, you bought in today for it? So
this name, like I said, I
yeah.
initially said it was up over 80%.
Well,
It's up
yeah, you could just wait, I guess.
year to date. It's up 2% this month. It's up 180% off of its 52-week low. A name that was a high flyer of the pandemic, then has since been beaten down, and now has been.
If it does retest the low of the day,
so
look for a
name, Alex. They don't have earnings this week.
bounce.
They're actually one of the few that has earnings next
which would be an
week.
inverse handle, which
Wednesday, August
might be a good
2nd,
exit
after
if
the
it starts
closing
to
bell. So we do have some
show
time,
weakness.
I mean, relatively speaking, ahead of that next earnings event.
Yeah, and I looked at a strategy that would be.
But I mean, you could hold it longer
event.
term too.
It's
Like,
call calendar spread
it's
to the
sketchy because
upside, highly
I don't know a whole lot about it, but I think they were talking Chapter 11 for a bit.
change the strike, change the expiration,
But this
change
could
the
definitely still have
incentive.
momentum.
We're looking at a bullish one.
I mean, you have a lot of volume today on it.
Well, I can understand, especially with the analysts.
I don't really know the actual catalyst though.
Be bullish on this strategy or this particular name. So we're looking at a bullish
Yeah, I don't think it's
strategy.
anything.
So 75 call calendar, selling next Friday, buying the following Friday. What I found quite interesting about this is it's only 25 cents for a debit.
Plus
So that
money
means
right
it's only
before open.
$25 in risk.
Wow.
This is about as small of a total risk type of a trade as we'll look at on this program. But with that, you should know whenever there's less risk in a name like this or a strategy like this,
BBIG moving back up to
you
VWAP.
maybe have a lower probability of success. So you kind of got to be right with this one. And with earnings and this being
Turca's even up 8%.
$65. It needs to rally 10 to get to 75, which is of course the best case scenario. If that doesn't happen, it's likely that that full $25 or that full 25 cents, if you're looking at the option,
Temporary sticks around.
would be at risk
Nice
and
psych.
possibly even likely lost.
Airbnb looks just crazy extended.
But looking
Looked at it this morning briefly.
A big move, a positive move post earnings. In this particular example, as you can see that risk profile, mountain-like peak right at the short and long strike.
Yeah, I mean, it's above this level, but it's starting to show weakness. I wouldn't be surprised if we did a head and shoulders up here.
Low total risk in terms of dollars.
The shoulder right here.
But also a little bit lower probability, as you got to be right. And the more precise you are in being right, the more this one can stand to make.
Right, I think that's really well put, and of course, a way to utilize some of the bullish momentum we've seen, especially today, given the fact that we're only seeing some more bullish price targets from the analyst community. Street has really found this name in favor as of late, with a lot more buy ratings and a lot more upside to some of these price targets. But that'll do it for our FOMO segment today. Now, coming up next, we will look at another name that's
trend trajectory
on the year,
here
and
and here.
Airbnb continuing to reap the benefits of some strong
For a break of that with the right
travel
shoulder.
demand overall. This name's up 73% this
Otherwise,
year and
it
higher
keeps
this month.
bouncing off this
We'll
level.
discuss that more with Renita Young
Yeety up.
next.
Pulling on puts. Yep. Full port on puts. Short end living. Yeah. Could be, but and not rightly so, but without some opposition, they win with that. Opposition being turnaround plan, good earnings, good numbers, some reason to go along on it. Without that, the short end oblivion is a great play. If it's, weak and dying. So, I don't know. Yeah, the volume in the pump the last couple of days. Shorts maybe know someone, something. Inside triggered this. AMC fell back below there, just wicked. Barbecue flat, 3150. BBIG consolidating there. I mean, I don't usually do TA or consider TA with earnings. I'm not thinking, oh, TA says it's going to come down. With earnings coming up, that doesn't make me think the market's just going to sell it off into earnings. So, yeah, I don't know. I don't know about that. But yeah, full port into puts. That's right. Yeah, Turka is getting some action. I ran up a while back, then died. Oh, the Turka run up. Yeah, you got a reverse split on there. It actually looks pretty good now. Got a little inverse head and shoulders. Sort of forming. Has some resistance here though. Prior support. Break that. When barbecue moon. When Cohen presents himself. SPY making a little intraday cup here. See this? Maybe we're gonna break out. Maybe. BBIG. Not going for it. AMC's holding up pretty good there. 12.3 on costs. Dilution's guaranteed. Guaranteed. BK or dilution, right? Cameron Chill FUD. Volume on AMC today. 201 million. RC is now 10% stake on it. Can you imagine? Oh my gosh. Then RC truly buys all stocks. I don't know about anymore, but at one point GME was way more shorted. I could see AMC being shorted more now, though. I could accept that.
Business is certainly an interesting one, to say the least. Now, it is moving quite a bit higher based upon the Oppenheimer release, which so far has been quite a success overall for this company. But you also have to consider the business itself from a profitability standpoint. And, you know, looking at it compared to companies like AMC, we can see AMC is bouncing today based upon some short squeeze elements. There's also some court rulings that are in favor of AMC equity holders moving it higher. But you can actually see quite a difference in the two companies' performance, but also in short interest. IMAX only has about 5% of the short float of the total float available, whereas if you look at AMC, it's close to 30% because overall IMAX is a profitable business. They actually generate about 77 cents in earnings on a forward basis, on an adjusted basis, whereas AMC is still losing money. And gross margins for IMAX is actually quite high at around 53% of sales. And if you compare that to AMC, they're generating only about 9% gross margins as a percent of total sales. So there's quite a bit of difference in the technology, in the business, the profitability profile for IMAX. And one would say even that looking at it at 20 times earnings, it's still a compelling valuation compared to its 5-year average.
Fascinating stuff. You know, George, I guess what I kind of sum that up as is they actually have some skin in the game when it comes to the product that you're going to see. Yep. Where AMC, they're invested in your experience. You have a bad experience at an AMC theater, we can say Cinemark, we can say Regal, we can say any of those traditional chains, you're going to probably reflect that on AMC. But if the movie's bad, you're reflecting that on the studio. You're not necessarily reflecting that on the movie theater themselves. So sounds like IMAX, though, they're helping create these films. They're loaning technology or providing access to that technology. If this Oppenheimer film's a flop, probably, and say it's specifically a flop because the cinematic experience isn't that great, you're going to get less customers. So they need these films to do well, not only because it affects them, but it helps them get more customers. And so it sounds like this was a really, really good story and opening weekend for them in terms of that film and their impact on making that film. But my question to you, George, and maybe you can clarify a little bit here for us, is we know the pandemic impacted this particular business and movie theaters a lot. Did IMAX struggle to the same extent that these other companies did from a balance sheet standpoint? Were they able to weather that storm better? Were they in a more healthy position going into that? Because I see a market cap that is sub $1 billion, but I don't remember reading about restructuring every single month for the last 5 years. And maybe that's just because it doesn't grab the headlines the same way AMC does. How have the last few years been for IMAX in particular?
Well, I think if you just look at the balance sheet, the debt to equity is actually relatively sound at around 1.5 times equity. You got to consider AMC, it's like over 3 times. The other thing is the income statement. I mean, at the end of the day, the company is generating, in terms of sales, about 18% on a trailing basis, forward about 16%. So they're expected to show some deceleration compared to last year, at least on a forward basis. But EBITDA, I mean, they have positive EBITDA, 26%. And so you put 26% EBITDA on 16% revenue. I like to talk about 1.5 times to 2 times EBITDA to sales. You have a nice trend. So I think that speaks to the soundness of the business. You got to think about the large format film technology in terms of movie production. During the pandemic, we know that, of course, movie going ceased to exist, at least for some period of time, but movie production still went on. So you have to think about the licensing technology and the format that IMAX commands in the marketplace, and there's a premium to it. And I think that's what you have to separate IMAX from the rest of the AMCs or Cinemarks, which really rely on the popularity of films and, of course, customer engagement at the theater, whereas IMAX doesn't necessarily rely as much as a percent of total sales on patronage, but rather on licensing its technology and production capabilities. I think that's what you have to consider when you're looking at IMAX. I think the large film format is still very popular. Obviously, production studios are still utilizing it. And the other thing, lastly, here is China. China's a big story for IMAX, where about 31% of their sales are. And, you have to think about maybe some of the secular trends in the United States. They seem to be waning just a little bit. I think maybe from a cultural standpoint, there's also other alternatives like streaming at home. That's put pressure on all the film industry from the patronage standpoint. But China's been a growth story for IMAX, and I think that's a key ingredient in its success, at least in the past, but also on a forward basis.
And George, I have to say that there's something to be said about if you're going to see a film, IMAX is truly one of the best experiences. I know AMC has its Dolby theaters, which are somewhat comparable, but IMAX is still considered the leader as far as format and quality of the film. And I think if you're willing to shell out to a theater experience, typically I would always pay more for IMAX. I know it's more expensive, but it's truly wonderful. So I think for that reason, typically it receives really high remarks, at least from what I can see from the movie enthusiasts online. But we will leave it there. Great breakdown on why we're seeing IMAX higher, and I think it's very important to separate the conversation between movie theater stocks as AMC's up on its own news today. So we appreciate the thoughts from George. That does it for Alex and myself for Next Gen Investing for this Monday. Coming up next, we have the watch list with Nicole Pedalides.
Let's walk through how to analyze a company's financials on thinkorswim. To get started, go to the
There's the breakout finally on SPY. Ripping into new highs.
Is sort of the first order way to play this. I think probably the more interesting thing is going to be the second order effects, like which companies are going to be implementing AI inside of their inside of their processes to improve their productivity. Think healthcare companies, think industrial companies. Those are some of the more obvious candidates for this. But we do think this is the start of probably a multi-year type of phenomenon.
Right, and that's the idea, is that pretty much every company will do better with AI. I mean, I keep going back to that Campbell's Soup conference call where they asked about AI, and that's sort of the idea, that AI will help all companies. And while AI can be controversial, there's been this correlation made to the tractor, and that the tractor was brought on, and a lot of farmers were upset. They lost their jobs, but this is how things evolve. I mean, when you talk about healthcare and industrials, can you name some names, or are there certain companies that you think may benefit from AI?
This is kind of a fascinating article. We don't really know yet. But part of the investment analysis going forward is going to be is figuring out which of these companies are actually incorporating some of these techniques into their stream. So if you think about healthcare companies, probably the most obvious example is going to be like the biotechs and sort of the pharma companies in terms of drug development and protein folding and things like that. But I mean, again, we just don't really know. We don't know about how some of these companies are going to integrate it. But that is going to be a big part of investment analysis on the individual security level going forward, we think.
Right, understood. Tell me a little bit about the Fed this week. We were just talking about the possibility of the Fed only raising once more. Is that a possibility in your mind? And what happens to rates? Because they've been somewhat tepid here.
Yeah, I mean, I think Kevin hit the nail on the head just a minute ago. They will probably raise on Wednesday because that's fully priced in the market, as they say. And so the Fed doesn't like to surprise things. And so we think they raise on Wednesday. But frankly, that's probably the least important part of the Fed meeting is them raising rates, because we do think it's going to be the last one. And what we're not going to get, unfortunately, is Powell coming out in the press conference or any of the talk after that and sort of saying, yeah, guys, we're done. It's not in their best interest to take away optionality from themselves. And so they're going to hold out and probably have some pretty hawkish comments, I would guess, in the press conference to try to convince the market that there are further rate hikes possibly in the pipeline. But we don't think they're actually going to need to deliver on those rate hikes. We think rates are restrictive enough, and the path for inflation is incredibly obvious at this point. It is straight down, and is not going to be a problem by the time we get to the end of this year.
Right.
Have you guys figured out how much you can actually make lending out your AMC shares?
Right, just so that the market.
I've heard some brokerages are capped. Some brokerages take 50%.
What are you thinking there?
I'd be very curious about that. Do you guys have any insight?
Is astonishingly low. Certainly the next 6 months
If it's anywhere close to 1,000%, that seems like a no-brainer to hold shares and lend them out.
We saw the COVID recession coming because nobody knew what COVID was in December of 2019. But absent some sort of externality like that, we don't see any of the sort of markings, any of the hallmarks of a recession coming. If you look at consumer balance sheets, they're incredibly strong right now. Corporate balance sheets incredibly strong. Labor market, it's a lagging indicator, but it's still showing no signs of weakness at all. Not even a single. And so all the things that you think you would start to
heavy
see
into September, Jimmy.
We're just not seeing.
Seeing all these other basket ones moving, you're thinking GameStop's turn. I like GameStop on a break of this line right here. Break of that line, I'm down.
We don't see any
down for at least a retrace back to 27.
Inside of economic data or company data or earnings or consumer behavior or anything like that. that would suggest that the recession is likely, for the rest of this year, certainly.
Yeah, you mentioned healthcare, real estate, tech, and communication services as the sectors you like. Which one is your real favorite of those? And tell me a little bit about some of those and why you like them right now.
It's kind of boring, but it's still probably tech and communication services, and we sort of lump them into the same thing because they have the same basic drivers. Nicole, just the stuff we've been talking about with respect to the AI revolution, and the other part of that story, though, really is the fact that if the Fed is done, then we have seen peak rates, and if we've seen peak interest rates in the cycle, then we've also probably seen the trough in multiples. And so, not only are we going to get probably some further expansion in multiples on the tech and the communication services side, but we are going to probably get some pretty good earnings this week too. Now, we'll see because those earnings, a lot of those are going to be coming through this week. But we do expect to see these companies really continue to perform on the revenue side, really continue to perform on the margin side. And with earnings as a tailwind, and with multiple expansion as a tailwind, we still think it's probably one of the best places to be in this market.
And at this point now, Microsoft, Google, Meta, we'll have, Intel. We'll have a lot of names related to tech and some of the other fun ones like Visa and Boeing and Chipotle. Thoughts on any of the names for earnings this week or themes that you'll be looking for? Guidance?
Yeah, I mean, look, it really is going to be about some of that guidance, as you just said, Nicole. And really the part about the guidance that we're going to be most interested in is what are consumers actually behaving like. Consumer sentiment is still kind of in the toilet. People still don't feel great about this economy. They don't feel great about this market. They feel better than they did a few months ago, but still not great. And so but that has not been translating into consumer behavior. That's not been translating into lower spending. And so, if we detect any signs that sort of a dour consumer outlook or dour sentiment is translating itself into kind of dour behavior on behalf of consumers, that would give us some pause, and that might change our outlook. But absent any sort of indication from some of these companies that the consumer is starting to retrench or pull back in any way, we think we could be off.
What's up, Archer?
Second half of the year.
IP's moving.
Right. Well, a busy earnings weeks ahead, and Fed is.
Wow, yeah, IP's up 4%. Not bad.
Chief Investment Officer, Horizon Investments. Thank you.
Sundial squeeze with AMC every time. I'm not convinced AMC's squeezing yet.
We're talking about names like Microsoft, Alphabet, Google, Meta.
I went long on the futures on the retrace of that breakout, and I took profits, and now I'm looking to get back in. Get another breakout. Biggest bear trap in history. While the market's having the biggest bull trap in history. How is the breakout line? That's a good point, Cameron. About Pac West. Yep, Cost and Express are both rallying today. View of the basket, retail basket's up. Highs coming down a little bit here.
He needs to raise capital, especially
See if it's just
in
reloading.
Hollywood. Meanwhile, of course, the Barbie movie opened to big numbers. AMC reported its highest attendance since 2019 and its second best weekend ever in
Reloading.
concession sales. Shares of NEO are at its highest point since February. China stocks across the board are higher after the government pledged to optimize the country's business environment following its recent GDP miss. Today, NEO is seeing above-average trading volume. Shares of the China EV maker are up more than 20% this month. Goldman Sachs continuing to rise after last week's earnings, and today UBS raised its price target to $400 from $385 with a buy rating, keeping that buy rating. Shares of Goldman are at their highest point since March, up more than 10% this month. Goldman is among the top performing names in the Dow Jones Industrial Average today. And Gilead Sciences is falling after a trial setback for its blood cancer treatment. Biotech company decided to discontinue its phase 3 study after missing its targets. Multiple analysts have trimmed their price targets, and Gilead's earnings are due on August 3rd. Here's a look at Bitcoin right now, 28,990, down 3%. Let's turn our attention over to the small caps, all right? How much love do we have for small caps? Brian Smolik's with us, Principal and Portfolio Manager, Hood River Small Growth Fund. Thank you for being with us. So as I'm watching the Dow hitting a new high, markets are just off the highs, and the Russell's up about 10% in the last 3 months. What are you thinking here? Do you like small caps?
We like small caps on a relative basis more than large caps, and there are a lot of reasons for that. Usually, small cap growth stocks trade at an absolute premium to their large cap brethren because of their higher growth prospects. Right now, they're at parity. They had been at a big discount. And as you mentioned, there's been a big lag in performance. They caught up to large cap, but we like the fact that they can grow more on an earnings basis next year, and valuations are still pretty good despite the run.
So you think there's opportunity here, because what happens is the large caps just get overplayed, overcrowded. So with the small caps, I know you brought us some picks and such. What kind of themes were you looking for when you're trying to make a pick in the world of small caps? What are you looking for? Is it the balance sheet? What is it specifically that says, hey, this could be a win?
That's a great question. Really what we're looking for is an inefficiency in the stock on the fundamentals. Typically what that means is that when you look at the sell side estimates, which are a good proxy for where the street and the buy side sees the fundamentals playing out, we want to see those be really conservative or just be completely wrong. And you typically have less than 10 sell side analysts that are covering any given name, so there's lots of opportunities to find great companies at great valuations that are going to make or exceed those sell side estimates over the next couple of years.
Right. So a name, for example, like DigitalOcean, DOCN here, which is up about 86% this year. It still has some room to the upside?
We do. We do think there's upside there. When you look at the valuation on 2024 earnings, it's trading around 22 times earnings. It's growing north of 20% on a top line basis. They're basically an AWS for small, medium-sized businesses, and AI is a nice tailwind for being a cloud provider for those types of customers as that continues to proliferate throughout the economy and through lots of their customer base. So one theme that you mentioned is the obvious one, which you talked about with some of your prior guests, is AI. That's obviously a huge game changer for small cap companies that can capitalize on. DigitalOcean is one of those that can do that, and you can do it in a good risk-adjusted way given the valuation at 22 times earnings.
I understand. A name like Celsius Energy Drinks, we've had the CEO on several times here on the network, just talking about gaining market share and product placement throughout convenience stores and such. It has been certainly a nice run here. Year to date, it's up almost 40%. It's just recently hit a new high. Where do you think this one could be headed and why?
Yeah, that's funny.
Stock could go to
We're talking about small caps.
Which would still be only assuming a 15% overall market share for Celsius in the category. Market share point is worth about $1 billion in market cap. Right now it has a $10 billion market cap. So the market's assuming they're going to get to about 10% share. They just inked a massive
AMC just chilling out up there.
Pepsi last year, so they're able to grow about 70% this year. We think there's upside to that, and next year is going to set up well as they continue to get even better distribution and more brand recognition. So we think it's realistic that the company could get a 20% share, and it's a great product, great management team. They've been delivering on the numbers for several years now. It's been a good name for our clients.
Right. And just like names, I know Fortress Aviation and Harmonic are also on your list, but just names that we're waiting on.
So Carvana?
Names, whether it's Meta and Google and Microsoft. I mean, you just sort of, do you have those in a balanced portfolio, or you just think they're all sort of overrun? Names like NVIDIA have doubled, Tesla has doubled, Meta has doubled. Do you stay away from those on purpose?
Well, so we're small cap managers, so our mandate doesn't cover those stocks typically. We have to have an opinion on the fundamentals and the partnerships. They're great companies. The valuations does give me some pause. They have to deliver on AI, especially names like Microsoft, and you get exposure to that just by owning the S&P 500. I prefer to go to names that are more inefficiently priced, where we can have a research advantage. It's hard to get an advantage in a name like Meta or Microsoft, given how broadly covered and talked about they are. That's why we like small cap, and that's why we've outperformed over time.
Yeah, and that's part of your mandate and what you're working on. Harmonic and Fortress Aviation, tell me about those.
So Fortress Aviation has two primary businesses. They have an engine leasing business, and then they have an aerospace products business. The engine leasing business has gotten really tight in a good way, and that demand has exceeded supply in the industry. Prices have moved up. That's going to stay that way as the world returns to its normal travel pattern and the supply chain continues to be tight for airlines. They have this airline products business, which is basically servicing engines that need maintenance, and that's growing over 100%, and that's really where the upside is. And they're getting more approvals from the FAA this year that should continue to lead estimates higher next year, and it trades at a discount to peers. Harmonic Lightwaves benefits from the cable infrastructure upgrade cycle that you're seeing around the United States. They benefit from Comcast this year. They're going to benefit from Charter next year. The Charter estimates aren't fully in the numbers, and it trades at 15 times next year's earnings.
Yeah, Brian Smolik, thank you so much. It's wonderful to see you.
Thanks.
Good luck there
Thanks.
at the small caps. We appreciate it, Brian. Hood River Small Cap Growth Fund. Coming up next, big tech.
Hood River.
Let's take a look at
Oregonian.
some tech. We got an earnings preview for you on Microsoft, Alphabet, Google, Meta, all reporting this week. What we need to know, more of the watch list. We'll be right back.
Whether you're an experienced investor.
What about AMC instead of Tupperware? Yeah, we'll see, JT. Tup's interesting. I think upside on Tupperware. It's riskier, but percentage-wise, you probably have more upside on Tupperware for potential. GME's up 2.8. We'll see. We're getting down to it. The decider. I did go back long on this dip here. Probably close some up here. The high of the day test somewhere around here. Guess we don't get a breakout. Stop is below here.
Earnings after earnings, during earnings.
Well, I mean, what we had last week was definitely a change from the last earnings season. Now, it was only, 3 companies. We had Netflix, Tesla, and Taiwan Semiconductor. But they all got hit pretty hard on their earnings. So the AI phenomenon wasn't able to help them offset it. And we saw and they saw some downside follow through the very next day. And this is a bit of a change. Now, again, 1 or 2 days doesn't make a trend. But if we start to see a similar situation with some of these other companies that are reporting this week, people are going to start to get a little bit nervous again because of because of how expensive they've become, and people will start to look to maybe to rotate to some other sectors. But I guess the big thing to look out for here is that. Back in the last quarter, and it goes to your question about the bonds. The bonds, bond market tends to be right when there's a discrepancy between the two, and the earnings last quarter from Advanced Micro Devices and Taiwan Semiconductor stocks were quite weak, and their guidance was quite weak. They were talking about slow demand, but then AI, then suddenly Advanced Micro announced that they're getting some help from Microsoft on their AI initiative, and the stock just took off. Well, I guess my point is the demand side, the fundamental side is weak, is getting weaker, and as we saw from Taiwan Semiconductor last week, continuing to be that way.
The FLI broke VWAP.
With the big run
The
they've
upside.
had, you might see some people try to take some profits here over the near term.
What couple of names, 1 or 2 names, are your favorites and why?
Well, I mean, it's funny. This time last year, when the market was really getting when the market was started actually trying to bounce back a little bit, and I really thought it was a sucker's rally and we'd see a new low. I was saying what you should look at are the stocks like Meta and like
I stopped out there.
because they were actually cheap, even though a lot of other stocks hadn't come down. So to buy them very gradually, and then over the next 6 months, if you buy it a little bit each month, your average price is going to look really good. Well, if you see that kind of weakness again, any kind of weakness in those 2 names, you're going to have a similar buying opportunity. I mean, Google and Meta have both they're much more expensive than they
Coming
were
down now.
This time last year. But those are 22 times earnings.
Looks like this head and shoulders might actually break out of the range to the upside.
We see with Apple and Microsoft. Again, Apple, Microsoft.
Or we're just still in this chop.
I'm not saying people should sell them, but again, with a little bit of froth in this marketplace, when you're looking at dips, those 2 stocks are going to dip a little bit less than I think an Apple or Microsoft, if and when we do get a pullback in the tech group.
Yeah. All right, let's leave that there, and I would like to turn your attention to the market overall. And you have the stock market thinking one and done. One more hike from the Fed this week, and then pretty much done. Even though we may not get a hawkish, we may not get a dovish Jay Powell, but that people think it's pretty much over. And a lot of the price targets that folks are putting out for the S&P 500 for a year end are higher than the current level. What's your big picture on all this?
Well, I mean, the whole thing that everybody's worried about,
8.3% on PacWest.
Actually becoming less worried about, I guess, is the higher for longer issue. I mean, I guess my point is that I don't really care that it's their last hike. If they keep interest rates at these levels for an extended period of time, that's going to still create some headwinds for the stock market because it's
Happy
expensive.
Owl Power.
I mean, the last time in the end of 2021,
Got 30 minutes there.
22 times earnings,
Happy Owl.
right now we're about 21 times earnings, a little below that, but we're still expensive. I mean, interest rates were much lower. And so with interest rates much higher, it's much harder to justify these higher valuation levels. And of course, course, no market, no rally happens in a straight line. So if we do get that feeling that they are going to stay higher for longer, at some point in the coming months, we're going to have to see a bit of a pullback just because of these valuations. I know valuations are a lousy timing tool, but they're still important. And again, with the slowdown in growth we're seeing here in the U.S., even though a lot of people don't think we're going to have a recession, we're still seeing a slowdown in growth, and we're definitely seeing some in both Europe and China. That kind of gets it hard for people to get enthusiastic about a big increase in earnings, which is what you need when the market is really expensive.
And at this point now, what's the strategy, the best investment strategy for someone maybe not going into retirement, but someone who has some years ahead?
Well, I really think that looking at, again, say some chips off the table, a few chips off the table in some of these big cap tech names. But again, for most of them, like an Apple and a Microsoft, et cetera, they're such good companies. You want to hold on to the bulk of those positions. But any new cash you want to put in, think about rotating into some groups that have been beaten down. I mean, the bank stocks, you want to be a little choosy there because they've had their issues, obviously. But they're a very, very cheap group. And you see on a technical basis, they're definitely breaking out after forming a nice base over the last couple of months following that crisis in the spring. We're seeing the healthcare stocks starting to break out, and same with the energy stocks, with crude oil finally starting to get a little bit of a bid, breaking above its 200-day moving average. These energy stocks are getting looks like they can outperform in the second half of the year. So I guess my point is, look at some of the groups that have underperformed in the first half of the year. I think they're going to do a lot better in the second half of the year, and I just going to be a lot harder for the tech group to have continue with that great run that it's had.
Matt Maley, great to see you. Miller, Tabak and Company. Thank you.
If we get a bounce on SPY before it flushes to VWAP,
Still
that's what I'm
ahead,
waiting
the
for.
second half of our show, we'll dig into VanEck's MOAT ETF. So we'll find out why MOAT stocks are advantageous in today's environment. We'll explain. And as we head to break, take a look at some news in the S&P 500.
Nothing yet. Largest silver mine in the world declares force majeure? What's that?
25,431. That is up 11 days in a row. That's pretty amazing. We haven't seen that since 2017. The NASDAQ is up 30 at 15,455, and the Russell's up 0.25%. For developing stories here, Jenny Horn's with us, market correspondent. To first take a look at Netflix, which gets an upgrade over at Baird. What's the story there, Jenny?
Right, Nicole, we are seeing shares of Netflix down today. They're one of actually the few names in mega cap that is lower on the session despite some overall market strength on what was objectively a really strong report out of Baird today. Like you said, upgrading shares to outperform from neutral while also raising its price target to $500 a share. That's up from $340. The constructive stance, they said, is driven by increased confidence in Netflix's execution around new initiatives like advertising and paid sharing, as well as its strengthening financial profile that should further improve investor sentiment over time. The firm did say that near-term expectations seem better than calibrated following Netflix's second quarter print. The modest share pullback, they said, has provided an attractive entry point into a strengthening long-term investment case. However, they said the stock's valuation is admittedly rich, but this is warranted given the company's underlying momentum and unique qualities of its business. So to me, this almost feels like speaking out of two sides of your mouth, saying that we have seen shares pull back, well, then the valuation is admittedly rich. So it's a little bit confusing to me there, but all in all, a really positive note on Netflix after seeing that pretty monstrous move lower following its second quarter print last week. So shares are still reeling slightly off of the open today, but this name's still up 44% this year. It's still down about 12% from its high, but still up over 100% off its 52-week low. So the 9% move lower last Thursday, it feels like shares are starting to shake that off, although still I'd say digesting the fact that Netflix is not the same growth engine it was, say, a year, 2 years ago.
All right, and then when we turn our attention over to Spotify, change in the pricing there.
Change to the prices, and we discussed this earlier, how it feels like every streamer right now is getting more expensive. Netflix is part of that conversation as well. So these two, I think, go hand in hand. But I think Spotify looking to capitalize on the fact that consumers that are used to their service and used to their streaming will probably pay a premium just because this is so well integrated in so many of our lives. Shares are down about 5% now. They've continued to steepen some of their losses after the company did announce this pricing revamp, saying the U.S. prices are now $10.99 per month for their premium single, $14.99 a month for premium duo, $16.99 a month for the premium family, and $5.99 a month for the premium student services, saying that with this being one of the most popular audio streaming subscription services, and given the fact that they have access to on-demand and ad-free music listening as well as offline music downloads, the market landscape has continued to evolve since they launched back in 2008, so that as a result of wanting to keep innovating and keep growing, they're changing these prices across a number of markets around the world. These changes will then help them deliver and continue to really execute on some of the best content out there as far as the audio space goes. So again, as a Spotify user, this is actually my #1 most used app. I will probably pay this premium for the price increases, but Street doesn't like this news, and we have seen that loss on the session held really throughout all of today's trading.
Yeah, and meantime, on the other side of the coin, you've had SiriusXM since last week having a lot of volatility. It's gone basically from $8 to $6.50 and selling off. A big short squeeze that happened there. So
Redfin's up 9.
To follow that, because that had a huge move higher. That was the short squeeze, and then has been selling off.
Yeah, bouncing off that trend perfectly.
Streaming radio, I guess you could
I
say.
guess that is one we marked for yesterday.
Thank you, Jenny Horn. Good to see you. Thanks. Now let's turn our attention to an ETF, Moat, and that is the focus here. Brandon is with us. Brandon
Rest 9.5.
Director of Product Management at Van Eck, to talk and explain what this Moat ETF is. How new is this?
It's actually not that new, and it's getting a lot of attention as of late, but the ETF's been around for over 10 years. It launched, brought to market in 2012.
Okay, and so what was the sort of premise behind it?
Really what this comes down to is, as moat implies, it's finding businesses that have built a competitive advantage or a moat around their business model.
Right.
Yeah, so it fends off competition, and it can do so for long periods into the future.
And how many names are in this ETF generally?
At any given time, we're looking at about 45 to 55 companies in the U.S.
Right, and you're rebalancing how often?
Every quarter.
Is that
every quarter, the ETF
like a strike
underlying index that it's tracking
on the
will
silver
actually
mine?
look at the universe of companies that Morningstar's equity research team actually has identified as having a competitive advantage, a sustainable competitive advantage or a moat, and that actually allocates to the most attractively priced companies relative.
Eyes coming down here. Got VWAP. Flush through VWAP there. Oh, no.
So something's going right over this 10 years, basically.
Oh, yeah, there you go. A little fleshy flush.
How would you tell people if they were saying, hey, I'm interested in this? Why is this a good move for me to have the Moat ETF in my portfolio?
It's all about.
You had the head and shoulders there for the top. And then after it did break out of that trend was the short. I was a little late on it, but kind of see it here.
So those prices get pushed up and they become expensive. So this ETF allows you to gain that U.S. equity exposure to high quality U.S. companies, but ensure
We could come all the way back down to the low, but we'll see if we bounce here.
Approach to investing where you're just targeting these attractively priced
453 area.
Every quarter, and hopefully you're riding them to the top and allocating to more cheap.
453, 70, or all the way down to maybe 50.
Providing something that the others don't have, or you're really truly a market leader, which makes you untouchable. I mean, a name like Tesla, for example, when you look at the valuation, pretty frothy. And so with that, would a name like Tesla be in there or no way?
It's a great question. It's a great timely example because Tesla, I would imagine, is probably overpriced. But more importantly, Morningstar, their equity research team, does not assign Tesla a wide economic moat rating, which is their very forward-looking perspective of what advantages they've established and how long they can maintain them. So Tesla actually gets a narrow moat rating, which is a very good rating for Morningstar, but it just doesn't quite fit the bill for
So
the
it doesn't
moat
make
ETF.
it in. So what names have been in there for the long haul? I mean, there must be names that have just been in there forever.
Yeah, you're going to see names in the ETF that you would expect. You know, Microsoft's been in there for a while. We saw Meta come in and out of the portfolio quite a bit. So a lot of the names that you might expect to have a wide moat rating, but they're going to be coming in and out as those valuations allow them to. And so there's actually going to be I should say it's equally weighted. So it's interesting. There's actually the structural underweight element where this ETF has outperformed. It has this 5-star rating that you mentioned, but it's done so kind of despite some of the structural headwinds that it's had to face because it hasn't had full exposure to the companies that have been really driving market returns this year and in many years past.
Yeah, we're going to be talking about Domino's Pizza later in the show, and that's one of the names, I believe, that's in there, right? When you look at the different categories and sectors, you probably, I don't know how many you would have. Here's some of the leaders right here in your Moat ETF. U.S. Bank Corp,
Zinc, lead, and gold.
TransUnion, and Domino's.
Swing calls for tomorrow on SPY. Could set up a strangle or a straddle.
Yeah, so certain companies operate in sectors that are more prone to these moat ratings. So you might see more healthcare companies.
Because yeah, you've got consumer confidence in the morning, and then Wednesday you have FOMC. So you have movement. Thursday initial jobless claims. I'm not trying to be direction bias. So is this the low? I don't think so. I think 451's the low.
What about small cap versus
I think we have a big range here. We could trade in for FOMC 456 to 451. So I feel like we're closer on the higher side than the lower side.
Like you said, maybe that makes you a potential winner in the future.
Yeah, the strategy is
But yeah,
go anywhere. There's no
and right now you'll probably get an exit sometime
but it does tend to be a larger
in the future.
profile, so you're going to see that large blend exposure historically, and you might see a little bit of a tilt to value or a little bit of tilt to growth at any given time, depending again where these valuation opportunities present themselves.
We talked a lot about some of the things that are working and doing well. Is there anything that you stay away from when we think about thematic investing, right? And you might have ESG or energy or whatever, tech and such. Are there any themes, sectors, or trends that you just overall say we're not touching that?
No, not so much. It's interesting. So NVIDIA is a stock
like
that everybody's
like
been talking
China.
about.
Some people do ex-China.
Yeah. So
right?
this strategy really does not have any guardrails. It really lets the process work. So it's this just such a simple, straightforward investing approach. Find these great companies, and if you're a company that's built this long-term competitive advantage, you're likely in a business and have a business model that is kind of built to last and built for the long term. So really no guardrails, but the natural outcome is you don't end up with a lot of heavy exposure to different themes, if you will.
And overall, as stock market sentiment has been improving, are you feeling positive? Are you feeling cautious?
Yeah, we entered the year as a firm cautious. We were kind of expecting sideways markets, and
Right.
you've seen what the markets have done. We're starting to see more of the names in the broad market perform in addition to that top-heavy performance that we've seen. And when we really hang our hat on this strategy, that's why I'm here talking about it, and we love it for the fact that it really has performed well in all types of markets. So 2022 on the downside, it actually performed very
Picked up a call in Pac West. Thought you were already long.
All right, so
Going double long for earnings.
It's really an all-weather type portfolio.
Double long.
Great to see you. Thank you so much.
Thank you.
Brandon with us, Brandon Rakshowski of Van Eck. Thank you very much. Still ahead, let's talk about pizza. Domino's, the earnings were mixed, but what do we need to know as we take a look at names like Domino's and McDonald's? More food talk coming up.
AMC came down a bit, back below $6. I mean, I've kind of done that with the wheel strategy, J-Souls. My wheel playlist. Yeah, I mean, I've loosely started doing that with this account, this Webull account. Just trying to day trade it. But I didn't start with enough. So I'm out of money on it. I can still do some. I can still grow it from here, but I have like $7 back left in this account. I'm not really doing a video series on this account, but I might. I'm doing video series though on the Theta farm, which I'm updating, I don't know, as often as I need to. Once a month. If I'm getting more action and I'm opening and closing more positions, I'll do it more often. The earnings are July 6th at 11 a.m. So weird how banks do it in the middle of the day. Fubo's down almost 10. Eyes bouncing on VWAP there. I mean, there's no way I can give you advice on what you should do. You didn't want the good faith violation, so I figured you were holding anyways. BBIG's consolidated nicely. I like it. I like it still. But you gotta have a plan before you enter. Where you'd cut losses, where you'd add to it, where you'd take profits. Most people don't have a plan when they go in. Then they go in and hope. And if it goes the right way, they're happy, but they don't know what to do with it. And if it goes the wrong way, they never had a plan. They just end up holding and hoping.
Yeah, I feel a little bit like a management team. That's a lot of questions to answer here. But our fair value estimate for McDonald's is $260 right now. So that leaves the name trading at about 11 to 12% premium to our intrinsic valuation. And that's more reflective of, we think McDonald's is a very high quality, a wide moat company. We don't think the valuation is right. We've already layered an uptick in unit growth into our forecasts, consistent with the firm's new development strategy, and it's accelerating the Arches plan, its MCD strategic framework. We already see ongoing comp outperformance and ongoing market share gains over the next couple of quarters. And we think McDonald's is uniquely well positioned to deal with an environment where the consumer is trading down and increasingly price sensitive. We simply think that the market has gotten ahead of its skis a little bit in terms of the multiples that it's assigning that business. As we look across the restaurant space, we see the names trade in aggregate at about a 10% premium to our respective fair value estimates. the industry looks a little bit overvalued. We expect softening sales and softening margins sort of over the balance of 2023 and into 2024. The one bright spot that we'd flag within our coverage would be Wendy's, which trades at a modest discount to our $23 fair value estimate.
Okay. We have to leave it there. Thank you both. Sean Dunlop of Morningstar and our own Kevin Green. Thank you both very much. That's going to do it for us here on the watch list. Thanks for being with me. I'm Nicole Petalides. Every day live at the New York Stock Exchange. I want to know, are we going to make it 12 days of gains tomorrow for the Dow? Join me and we'll see together. Thanks for watching. Keep it right here. Market on close.
AMC's bouncing a little bit. This is the way.
Oh.
Those are other ways, Cameron. Siri's kind of getting a big sell-off after that odd squeeze. I mean, let's see if there's some kind of rhyme to this reason to this madness. You've got some support. I don't know. Look to go long on some bullish patterns around the support. I'd say $5.50, 5.6, that area, which also lines up with the 50%. I think that could probably come pretty easily. That breaks 4.6. Yeah, you got $5 even, which is that golden pocket there. For a day trade, you can go long right now and close at VWAP. Swing trade, I would wait. Unless you're trying to short it. Wait for VWAP and short it. Buy climbing back up here. How'd I close my shorts? Hour. That's true. We're in it.
Because I want to see if there's appetite to get back
We made it.
above the recent high
Congratulations,
from
you guys. Thank you much for
earnings,
the support
and then
today.
actually get back
Well
above the
done.
major high from last year would be a
43
big deal.
likes.
And so
Not bad. Thank you.
70, hanging on for the ride right now.
Pretty choppy day on SPY. Really only had this one setup that I liked, this Head and Shoulders. This move, yeah, that all sucked. I didn't like, yeah. Would have just been gambling.
One of the big automotive leaders in the chip space.
Oh,
That's
real.
coming this afternoon in about an hour, so we'll hit it live
Formation
here.
of anything here.
XPI's been on a
This was
huge
the only
run.
thing I saw today.
Should be a fun name to look at.
It made any
Regional
sense.
banks up 2%.
This, you could have bought this to try and get back in the range.
Continue to firm. It's almost like the path of
See if
least
it does keep
resistance
chopping
now is
around,
turned
but
higher for the banks.
this very well could have just
It's a
chopped here and then
really
kept
big
coming down.
We got through that $45
Oh.
on the KRE ETF.
Not great.
And we haven't really looked back since. It's
Market's going to wait on Powell a bit.
but it's important follow through. It's crucial follow through. But it should complicate
Oh.
the job of Jerome Powell on Wednesday because
Ugh.
he's generally sided with the market's
See, there's
view
SPY
that
coming
he
back
might
down.
be able to
There's a
stop
chop.
hiking after this next one. However, he's also talked a lot over the last 4 months about how worried he was.
Look at that consolidation on BBIG though.
Risk in the market
BEA
and
beautiful.
economy. We just haven't had that, and so the strength around earnings for that particular group that was really the source of the huge macro pivot that we made this year. It was regional banks back in March that changed so much of the outlook. Now with their stocks trending higher, if that is truly reflective of an improving fundamental condition, then it should make Powell double think. Go back.
Double
check
think,
his
pal.
work,
Do it.
See if maybe he can afford to apply a little pressure to the economy if he really is intent on fighting inflation. Doesn't look like regional banks should get in the way. Crude oil also might complicate the message for the Fed. I don't think yet, but watch it to see if it shows up at the 10-year and the dollar. Today, the 10-year is kind of pushing up a little bit, but nothing really to make a big deal out of. It did fade, though, from early strength, so that is kind of notable, where the path of least resistance for the 10-year does also seem to be higher. This is the 30-day chart, so you can see where the yield spent so much time trading last month, around 3.7. It looks like maybe we are now going to stay on the high end of that. It looks like the yield for the 10-year is kind of supported around 3.7, and we keep defaulting to fading bond prices and pushing the yield higher. Though note the big drop in the dollar this month. That's still in the white line there. Has a long ways to go if it's going to reclaim those losses, which were largely associated with the Fed pausing and then doing this 25 before another pause. So the dollar's sell-off has been very indicative of the Fed's path. That means we want to watch it this week. If there's any change on the margin to what the Fed is going to do, the dollar probably would firm up. Because also last week we saw the dollar pretty firm after some European inflation data, and we know that those central banks are much more aggressive. So if the dollar is able to recoup some of its losses from earlier this month while the yield goes up, that probably tells us that the Fed might be getting a little bit more hawkish on the margin, or that at least maybe we should keep our minds open to it before we get through this week. Let's bring in Renita Young and Kevin Hanks joining me here. Pretty important to continue to see follow through from banks, I think, Renita. Let's start there as the regionals don't really give us a lot of the major like household name highlights, but there are
10% on
still some
Redfin.
analyst notes out. Even the bearish ones are now like positive.
They are, and bank earnings seems like they were an eternity ago. It was just within the past week.
Because we're ready
and
for
a half.
Microsoft.
Right, we're already ready for Microsoft and ready for more tech names to come.
LPTV
But
TV is
higher
up 6.5.
today. Bank shares, financials, second best performers in the S&P 500 today. Financials are also what's lifting up, propping up the Dow today, and it's on a couple of positive analyst notes, which really, when we get down into the details of them, are more mixed than positive. But right now, JP Morgan raised its price target on Zions Bank to $38 from $34 a share. That's around a 3% move to the upside from where it's been trading today. But that analyst chose to downgrade the stock to neutral from overweight on this current valuation. It says that because of the current valuation, deposits are also now on a stable footing in addition to the current valuation. And the stock's upside potential is now on par with its peers. Now, D.A. Davidson also chose to raise its price target on Zions Bank, raised it to $42 a share from $34. That's around a 13% move to the upside from where it's trading today, keeping it at a buy rating though. So this analyst is still bullish on this stock. He says that the second quarter results were weak when it came to net interest income, but the rolling 12-month outlook is slightly better than expected. And then D.A. Davidson raised its price target on Huntington Bank shares to $13.
Could even be getting a little inverse cup right here and handle.
The upside from where it's been trading today.
Potentially
and kept a neutral
interesting.
rating on this stock.
The full inverse cup though is down to here, down to the low of the day, which not sure if that'll happen today or not.
That helps it win. But that bank is still down around
I do like that
year to date.
inverse cup and handle right there, though.
Feels like it has a better long-term look than it did before.
Well, it's good to hear because when we signed off with their CFO in our interview last week, I said it sounds like things are going pretty well. So I guess the analyst generally agrees there. And these aren't big, headline changes, but the fact that they're kind of keep pushing things up dollar by dollar on the price targets for these companies. And even when an analyst says, okay, we're going to take the buy rating off, but we still have to push the price target up. I mean, it kind of speaks to a confidence, Kevin, for a group that, it's easy to forget was keeping people awake at night 3.5 months ago.
Yeah, the fear was in the regional banks that there was contagion and that the risks they had to their bond portfolio was going to be widespread. Well, that turned out to be not the case, as most banks, both large and small, hedged their long-term bond portfolios in an efficient way that managed the risk. A couple of them didn't, and those are the ones that failed in this and caused bank runs. So yeah, the much feared contagion and regional bank weakness never really materialized, Oliver, only for a very short time. And it was more fear than anything else. Now, it wasn't fear in a couple of them. A couple of them did a horrible job of managing their risk and thus were acquired. But all things considered, that banking crisis from a couple months ago was just that, just a short-term problem with a very small number of banks, Oliver.
Right. Also manifesting itself here is a little bit of an energy rally. I know you've been talking about this quite a bit, Kevin, so I wanted to get your thoughts. We've been watching crude. We talk about this, you and I, every time we talk inflation data the last 3 months. Things have been surprising in exactly the way the market wants. The wild card seems to be the potential for commodities to wake back up. Are we starting to get something like that here? Energy stocks are up, crude's up.
Well, here's the thing, Oliver, and follow me on this theme. Normally when the dollar's up, you would see metals like gold is down on the day, right? And commodities heavy. But here's the thing, Oliver. Look at this trend. The dollar's up, but so is crude oil, so is copper, and so is Tesla and the casinos. What does that mean? China. Strength or perceived strength in China. Everyone I named there would confirm it a little more. A higher copper means China. Higher crude oil, China demand, right? If you see Tesla heavily, on a day that it got downgraded, Tesla up strong. That says China to me. And then you look for casinos, a little strength there, and it confirms. I think that group of stocks that I just mentioned there, aside from the dollar, which is going in the wrong direction for what I'm talking about, that tells me there's an underlying theme there, and it's China's strength, Oliver.
FXI, the big China ETF, up 2.2%, so I think you're onto something there.
There it is.
Yeah, good eyes. Okay, thanks, Kev. Appreciate it. Commodities moving in reaction. Thanks for looking at the banks we need. Appreciate it, guys. Joining us, Vincent Dillard has a message about inflation he wants to get across. He's a director of global macro strategy at StoneX Group. Vincent, always good to have you here. So a conversation continuing between us about this subject as well, or you've been telling us not to get lulled too deeply into a bullish cocktail, right?
Yeah, I mean, we had a what seemed like a fantastic print last month. I mean, everybody expected it to be lower, but it was still a bit lower yet. 3% CPI, we're almost there, right? Well, when you break it down, it's not that good. A lot of that had to do with used car, plane tickets, which are driven by seasonal factors, and really the big one is base effect. Obviously, inflation peaked in June 2022, 9.1%, and then it went down. Actually, the CPI on an absolute level went down from June to July last year. So we had favorable peak effects, and now we're going to have a defavorable base effect going into July. So I actually expect inflation to reaccelerate as early as this month, mostly because of the base effect dynamic. Also because, as the previous guest mentioned, we have a pretty robust commodity prices. We had a weaker dollar, generally a much more resilient consumer than people expected. So yeah, enjoy the disinflation because it's going to come back. Now, I think that the next increase is mathematical, base effect. And then after that, you kind of have I have the view that we will have a second wave of inflation. If you look at long-term cycles of inflation, it always comes in waves. Sometimes it's ascending waves, like the 70s when we had a small peak at the end of gold standard, medium peak during the first oil shock, and then the big peak at the end. Sometimes descending, like after World War II, when we had 3 descending peaks. Well, you always have a second wave, and this is something the market is not priced in. I mean, if you look at the curve, it's just going to slowly go down and then settle down at 2% forever.
Okay, so it's not so much a miracle. The first one is just comparables, right? As you put it in the title of your recent writing, but the miracle of disinflation won't last. That first part, pure mathematical, coming off the highs means you're doing from peak calculations, and we won't be doing that starting what, this month? Like, what about after this PCE? Not this one on Friday, though, right?
PCE is for June, right? PCE is always lag, right?
Yeah.
So it's the July print, the next, comes out. It'll come out in early August.
Okay.
PCE could be good. One thing also I wanted to mention is, people talk a lot about shelter and how shelter is messed up and it's lagging, and we all understand OER, all of that stuff. There's one part of the CPI that is very important, 10% of the CPI, that doesn't get that much attention, but that's at least equally bad as shelter is healthcare. So healthcare, as you know, is not an out-of-pocket expense, right? If you're above 65 is Medicare, if not, you have an insurance, right? So the way the BLS computes healthcare CPI is based on insurance premium. Now, insurance premium have been all over the map because of COVID. Because for a year, we didn't go to the doctor anymore because we're scared of catching COVID. So the profits exploded. And then after that, that's kind of reversing. So the result is that if you look at the healthcare CPI, has been going down for 9 straight months. According to the BLS, inflation in the healthcare sector is negative. Now I ask you, Oliver, has your premium that you pay for your insurance, has it gone down this year? Because mine have.
No, definitely not. I don't recall getting any freebies.
I checked the filings on the ACA marketplace. They have to disclose it's up by a median of 10% this year. And yet, you see the CPI tells you there is no healthcare inflation. And then think about it just logically, like you see the median item of the CPI is up 6.5%. The cost of everything's going up. Interest, labor, you hear stories about nurses making $250 grand a year, which by the way is a great thing. I have nurse friends who are nurses in California. I'm more for them making money. But if the nurses make $250 grand a year and there's the doctors, of course the doctors always make money and the insurers always make money, how could we have no inflation in healthcare? I mean, this is a statistical illusion, one that is perhaps as big as the OER or the shelter illusion, but the one that doesn't get talked about because it goes the right way, right? It takes down the CPI. If we had true numbers, let's say we just go back to 4% healthcare inflation.
BBIG ripping.
So nothing crazy, right?
Above VWAP.
That would add 50 basis points.
Hour
to
push.
the CPI. So that's why I don't believe we're going to make it down to 2%. Now, I don't know.
GME's up almost 3.
It depends on how the BLS measures healthcare inflation. I think a lot of that is
Top's trying to move up to VWAP.
That's when the negotiated rent
BBIG can make a new high.
Reset, and the premiums are reset. But that's part of my scenario for second wave of inflation. First, we get it now because of base effect. Then maybe it's the commodity thing that keeps going up. And then by the end of the year, we get the healthcare. And then we're still not getting any relief on the shelter. Like home prices are basically at an all-time high. So yeah, it was a good ride down to 3%. I hope people enjoyed it.
So we have base effects that.
Well, how does he have a fake background of like
the
a random house?
to continue at the same pace it already is. Just all else.
If you're gonna have a fake background, why wouldn't? Why would you make it look like a background you shouldn't have?
Healthcare prices
What?
down the pike from your logic on.
What is going on where he is?
There. You know,
So bad. He'd rather show this wall and mirror.
Well, at this point, it's hard to see it as very disinflationary when it's heating back up again. Data has told us. What about the commodity side, Vincent? On a day like today, where there's optimism over China, you know, it's basically like.
All right, thanks, Jay Souls. You too, man.
Two-face market for crude. It's like one day there's this optimism that WTI prices are going to rise again, and then 50% of the other days it's right back stuck into this range it's been in. Will we have to see something dramatic on that front happen to catch the Fed's attention?
Yeah, and I think that's how this cycle ends. I mean, this is just my gut feeling, but we'll see another run of oil prices to 100. That will force the Fed to hike in a maybe panic way. This is when we get the big drawdown in asset prices, kind of like in 08. I don't know if you remember Jean-Claude Trichet, the chairman of the ECB at the time, had the worst possible hike, basically hike as Lehman was going into bankruptcy because of oil prices. That's my guess on how it will play out. Now, of course, predicting commodity prices is, it's very difficult. But what I would point to is the China reopening. I think we're too excited about it 6 months ago. Now maybe we've gotten too bearish about it. And you see that, copper prices, like the chart of copper looks pretty good right now. You see oil getting a bit firmer. And then, actually, I think you're the one who coined it, and I'm the one who stole it. The trampoline lending.
That's right.
I've been using this in client meetings, and thank you. So basically, when you
thank you, Vincent.
Hard lending to soft lending to no lending to trampoline lending, like you look, all the data is firming it up. So I think that supports consumption. And then we have very low level of inventories globally, right? We drew down the SPR, even the commercial inventories are very low. So it's not hard for me to imagine a scenario where commodity prices increases. And then again, that's the chart you show it here. We've reached peak base effect on the energy, right? The peak for gasoline prices was in June of 2022. So just mathematically, now you have about 30% negative base effect, like deflationary. That's going to move up, and that's going to turn inflationary in September, October, just keeping the same prices. So imagine if you add a run to oil prices, let's say 85, it's very reasonable. You could have a very nasty surprise when it comes to the headline CPI number.
All right, now the last one. So we're looking at the energy and the oil futures there, which you can see the oil's bottomed out. So the end of that disinflationary impulse. But the last one real quick, if you can, I want to come back to, there's the oil one that you point out. So oil futures looking out a little bit here have started to calm. If we look at your food and energy model real fast again, Vincent, because the degree to which we rise, the first part here is that we're going to rise in inflation. How much, though? What does your model tell us?
So just based on current food and energy price and base effect, and assuming the rest of the CPI kind of follows the trend, we're looking at 0.35% month over month for July, and 3.5 on a year-over-year basis. So a small reacceleration, mostly driven by higher food and energy and worse base effect. And that's not talking about kind of the secular stuff I was talking about, healthcare, which I think hits in the end of in the maybe second half of the year, early next year.
Okay, got it. Thanks for the update, and run with the trampoline landing. You made my day. I like it. Adopting the language. Thanks, Vincent.
Welcome. Great.
Appreciate it.
Word.
Thank you, Vincent Dillard, Director of Global Macro Strategy at StoneX Group, with a cautionary tale on the next half of this year's inflation story. In the meantime, let's talk about defense stocks with defensive properties, perhaps. The steady cash customer of the U.S. government for names like Raytheon have kept the stocks entrenched in a range. But will they break out?
Many option traders tend to focus on price and direction. But implied volatility can also be a big factor in options trades. In the Options for Volatility course, we explore what implied volatility is and how it can potentially affect the price of an option. For example, let's say an option trader wants to take a bearish position on a stock, but isn't sure whether to buy a put or sell a call. Both strategies are bearish.
The color in terms of demand farther out is very good.
How much further out and why? Because it's been doing its job as sort of a rock, a place to kind of hide out going sideways. Some traders, investors like that. Some need some showtime. This earnings, you're saying we have to wait maybe another quarter?
Another quarter, another two. So the issue is this, that supply chain has been a problem for commercial aero. They slipped 40 engines at Pratt this quarter. It's been an issue on the defense side. We also, on the defense side, have inflation and overruns on some development contracts. The positive is that aftermarket demand is very strong. Traffic is terrific. And airlines are flying older planes that consume more spare parts. In the defense side, you're seeing strong demand for munitions. So I expect very strong or book-to-bill in the quarter. And because it takes time to build up production, these things are going to turn into pluses over the next couple of years. So we've kind of extended our visibility out beyond 25 to 26.
Okay. So we're not looking for any major developments tomorrow morning for Raytheon. What do they need to do to at least kind of keep the ship going at its current pace?
Well, so I think what people are going to focus on most is what's the color on demand. If you look at Lockheed, they had a 3.0 book-to-bill in their missile business. If you see numbers like that at RTX, that could get people more excited. I think the aftermarket, should see very positive color in terms of forward demand. So I think those are the things that people are going to focus on. But in terms of the numbers per se, I don't see those changing a huge amount relative to where people's estimates are.
Okay. The group, which includes Boeing, kind of looks like it is lagging that stock. I mean, Lockheed slightly down on the year. We're talking Raytheon slightly down on the year. Boeing a clear winner. So
32 cents on barbecue, up 1.5.
commercial aviation kind of in the place
Little
to
pop up
go.
here.
Is that the idea right now? You're better off riding the wave of the consumer comeback than betting on some big acceleration in the weaponized companies?
Yeah, well, so remember that the defense companies are not super cheap, but we are very bullish on commercial aero, particularly aftermarket, and also commercial OE, because capacity is growing far less than airline traffic. And as you look out, we're going to see increased pressure from climate concerns for people to kind of buy newer planes and upgrade their fleets. So you're really looking at replacement demand being a much bigger factor than it's been in the last decade.
The move in General Electric we've been looking at here that's connected to this theme, the rise in Boeing alongside a bunch of the airlines too. Where is the risk then at this point? Is it just a slowdown in any of the cyclical economy, or is there still proving that Boeing needs to do about any of the actual planes or technology? I mean, have we at least kind of moved past that as a potential catalyst for this stock?
For Boeing or for GE?
For Boeing.
For Boeing, I think it's really coming down to execution. I think people no longer are concerned about, demand. Suppliers 6 to 9 months ago were saying, well, Boeing's rates targets are too high. They're not saying that now, but supply chain continues to be an issue because
selling off there.
Are talking about increasing production year over year. Boeing
Set
and
up Cineverse Cup maybe
by 15 to 20%. That is not that easy to do.
All right. Tomorrow morning kicks things off here with Raytheon. Thanks for the heads up and what to look for. I appreciate it.
Terrific. Thanks so much.
You got it.
Cineverse Cup and handle played out.
With a look ahead of some of the defense names tomorrow. Might get a little overshadowed by the time we're halfway through this week with the giant tech stocks, but another one to keep on your radar. Coming up, options all bullish today. Tom's got a chip maker in the mix, Taiwan Semi, and Chevron too, after some interesting updates on their CEO's timeline.
Finish off the day with Jedi. Look at that bounce.
Taiwan Semi, who makes all this stuff, is basically saying their big money maker, which is smartphones, is still underperforming. They guided Q3 revenue down to 16.7 to 17.5 billion. The expectations were about 17.7 billion. So softening demand, semiconductor demand, adding to the macroeconomic environment. Expectations for China's recovery also hit this stock. So yeah, a broad array of misses there, especially on guidance moving forward. But that being said, I think somebody's buying the dip here and giving themselves some duration, right? Does this seasonality in the demand for chips wane a little bit? This trader thinks so because he's out in the November monthly cycle, so 116 days till expiration. Bought over 25,000 of the 90 strike calls for a debit of around 11.45, pretty hefty option premium, but you're buying duration on this one. So the break even for this trader, 101.45 over the next basically 4 months. That's about 3.5% above the current share price in there. They did sell out of their long August 75 calls. There was a big open interest position that was closed today. What they did was they extended duration and went up in strikes on this one. So yeah, somebody expecting a solid recovery in November expiration.
Okay, so given a little bit of time, pretty good amount of time, pretty much through the next earnings too. Hasn't really gone anywhere since that first dip down. It hit like 96 bucks the day of, so we've pretty much been holding on to that level, 97, 98 or so to the upside. Right. Nothing too impressive. How about Chevron, or the CEO's time is going to get extended there?
Yeah,
and they gave some pre-data for earnings.
Yeah, CEO who's 62 had mandatory requirements to retire at 65. They've extended that or waived it.
Nice.
But they did report earnings on Sunday, kind of pre-earnings, because they were supposed to report this coming Friday. But a little bit of a pre-announcement and some other executive moves for this company. But they reported an EPS of 308 versus 299 consensus. Q2 earnings of $6 billion, adjusted earnings 5.8. Record Permian Basin production 11% higher than year-ago periods. Record shareholder distribution, so a pretty positive report. And it doesn't hurt that oil's up $2.50 or 2.5% today, which is also helping lift Chevron. And there's some short-term positioning in here as far as unusual option activity goes. They were in their July 28th weekly series that expires this Friday. I guess they're going to give an overall view of the quarter on Friday when they were supposed to report earnings. So we'll take that into consideration, because this trader buying over 10,000 of the July 28th 165 strike calls, average debit of just over $1 on those. So break even of just over 166 over the next 4 days. That's only about 2.5% above the current share price in there, with call volume about 3 times normal daily average volume that we've seen over the last 5 trading sessions. So yeah, surprise report over the weekend, and it's getting a lift here today, not only on the back of that, but the fact that crude oil is at 3-month highs and hit 3-month highs today, Oliver, above $78 a barrel.
Okay, so optimism that leadership stability is going to be good for the company. I feel like it might matter a little bit less than the price of crude, as Chevron bouncing, trying to get out of this range back above 160 on the day. We're also getting some interesting crude action.
BBIG 50%.
Back above $78, near 80.
It's up over 55. BFLI 14, AMC.
Been under the same kind of pressure.
AMC holding up nice as well.
Oil prices have been, but we do need to keep in mind that
this very well could have some continuation.
Way up over the last 3
Got a nice
years, so.
bull flag coming into close.
Oil was $122 a barrel last June, so yeah, we've seen some deceleration in their earnings, but they continue to pour it out to shareholders.
Crude high from early 2022. Chevron in the energy sector high is basically the bottom of the rest of the market, so October last year. Right. All right, your overlooked stock here in the options corner today. FHN, First Horizon. Okay, well, I can see the horizon dropping off on the chart from earlier this year, where it fell off, literally fell off.
The creditor appeared.
Kind of got pounded during that regional bank.
$1 billion is owed to him.
That we had
just one guy.
46% this year. It has rebounded about.
Sounds like the people trying to go after that guy that won the Powerball. Hey, actually, that was my ticket. Yeah,
revenue
sorry.
came in just
Sorry.
about equal to
Got to
what
mention
they
that.
thought,
My
what
winning
the,
lotto.
the consensus estimate was, but growing period-end loans, they grew those by 2.3 billion. Deposit increased, 3.5 billion in deposit balances were brought in, and then in the current interest rate environment, robust deposit value base. I think that's why you're seeing this in a lot of other retail banks rebound over the last several weeks here. As I mentioned, up about 16% in July. And there are people in there positioning for maybe a gradual rally in this stock also, because they went out to that same November cycle that we talked about earlier with Taiwan Semi. And they were buying the no 14 strike call. So they're giving themselves duration about 116 days. Trader bought over 27,000 of those calls for an average debit of only 85 cents. So that break even of 14.85 over the next 4 months or so. That's about 13% above the current share price in there. Call volume, because we typically don't talk about First Horizon, 13 times normal daily average volume. And remember, the uncertainty, a lot of that uncertainty, and like the slide that we've seen this year, not only the regional banking crisis, but also the failed attempt at TD Bank to take FHN over. That was a deal worth, I think, $12.5 billion, $13 billion, and that failed. So that would also put the stock under pressure. But somebody betting it's going to be turned around by November.
Okay, based on anything or speculation or what? I mean, $13 up from 10 at the low, but I mean, it's like it goes a couple weeks, then it crashes. So has anything changed?
Well, no, I think if you look at the stresses in the regional bank space, there was a few bad players in this space, right?
But the charts look so much different for those. This one looks like it's like at any moment.
Well, no, I mean, it's like I said, it's rebounded 16% this year. They do have a good, it's not one of the super regionals, but they do have a good deposit base. Loans are still there.
I wasn't planning on having exposure to that.
Rate hikes this year. Maybe these banks start coming under more pressure.
But the banks have just been looking for cash secured puts.
That's a point of pain for a lot of these banks, and we'll see if that doesn't come into fruition.
I haven't really thought about it.
Soft landing.
Yeah, earnings tomorrow in Pac West.
Job market's still robust.
It just had one of those big second wind sell-offs. That's the big difference between this. I mean, they all got kind of dragged again in May, but this one blew up. In
Maybe.
May after
Yeah, I mean, I would just, I guess, wait.
And I think that was
see
more
potentially.
on the TD Bank not being able to buy.
Right. Okay. All right. Interesting. So someone's taken a bullish bet on one of the weakest. There we go. I mean, like we're talking about at the beginning of the show, a lot of optimism.
I haven't played earnings in a while. It's just kind of a gamble, I feel like.
An options trade.
So I would maybe sell premium.
Come back. Let's check in on the movies.
Do straddles or strangles.
On what was working for the theater business. We already talked about the AMC situation. Now let's talk about IMAX, the reels, the film.
32 cents. Up 1.5 on barbecue. I'm trying to go see Oppenheimer in 70 millimeter. 15 by 70 millimeter. It's like a 3.5 hour drive. So I've got to, it's gonna be a whole day event. In or out? I'm still in it. I'm not. I hedged some this morning though, or actually I hedged some yesterday, and then I got more exposure long on this break of $4. So yeah, I'm holding. I suppose I could just close it all out right now, but yeah, collecting premium on the cover calls, so. It's good. It looks bullish to me still. I mean, you might have some days of consolidating, but it's only Monday. Where'd you just big a move on Monday? I mean, by the time we get to Wednesday, maybe done quite a lot. You'll try 4 hours? Yeah, I know. Yeah, mine's 3.5. I'm like, I'm planning on doing it. I'm just I have to make it work out, figure out when. I'm not trying to go too soon. I don't I'm not like having to see it super soon. Because this museum that it's at, they're not assigned seats. So I'm like, I definitely want to wait until the hype dies down a bit. BIG is up 6.5. And
I actually prefer that we're talking IMAX. We started the day with AMC, to be fair, but IMAX has a more specific driven news cycle too this weekend. So we did see Oppenheimer, which was shot specifically with IMAX cameras, and also actually we did see some of these IMAX black and white portions shot for the first time ever. They generated $35 million for IMAX on its opening weekend, representing 20% of the film's total receipts. So why that's significant, it's the largest share of a box office debut the company has ever taken. It's also the fourth largest box office weekend ever for IMAX, bringing in around 46 million worldwide. And the CEO said Oppenheimer is an undeniable demonstration of the paradigm shift they're seeing in moviegoing, with IMAX taking a commanding share of global box offices as audiences show a clear preference for experiences that transcend the ordinary in cinema. And I thought that was really interesting because so many that I think are really into film and some of the inner workings of the film industry, we're actually seeing this film in IMAX, so I can completely understand that narrative. Internationally, Oppenheimer did open to around 13.9 million, around 15% of the box office on 329 screens. Wedbush actually did say earlier, or prior to this weekend, they saw IMAX being the biggest beneficiary due to the fact that customers have seen this shift in preference to some premium screens, as well as IMAX's international exposure. And I do think that's a really important part of IMAX's narrative, their relationship with China, as earlier this month they did announce proposing to acquire this full ownership of their China subsidiary. That deal is valued at around $124 million. So this is a company that stands to benefit on the continued recovery overall in the Chinese market. This is a major player in the Chinese movie theater space. I was reading all these Reddit articles about the feelings of IMAX overseas, and it seems pretty positive. So nice to see this name moving today on some specific news. I don't think we can obviously attribute AMC's move today just to a solid box office weekend.
All right. So some pretty specific IMAX numbers that give them a little extra boost. They can squeeze a little more juice out of the giant success that is this movie, which me, you, and producer Rob all saw. We all enjoyed. I think our ratings somewhere between 3 to 4.
I think Shorty did see it.
I think that's solid. I think it's a little bit more optimistic than Barbie, which I am hesitant to say because I do know Barbie was loved, but I wasn't exactly racing to go see Barbie in IMAX.
Yeah, okay. And this does seem to have like hit a nerve. Everybody wants to go see it in IMAX. Kind of an interesting, maybe it's the moral ambiguity of the character. Maybe it's people just need 3 hours of dialogue to set us right after our scrolling addictions. You know, I don't know what it is, but people are eating it up. So it's a great movie. All right, thanks, Jenny. Let's do some trading. Chris Robinson joins us. Last time we were talking about ag markets, Chris, and the potential for commodities to rise on that front. Today we get a little lift from China and the impact is seen. So are we learning here what moves the needle for commodities?
How do you figure?
Well, I mean, there's lots to talk about, right? You had a new high for the move in crude oil. That's spurred on by two things, some tightness in supply and also the talk that China's going to do some easing. The rest of the world is hiking. China's going to ease. So there's your demand. And you saw crude oil pop today above, we've been in this trading range for quite a while now, a 20-hour trading range, 83, 63. If we settle above 80, won't be too long before people start talking about, how much do those $100 calls cost. So we're right back to kind of where we were, right when that last OPEC hike, gave us that gap higher. And then of course we fell out of bed. So a good move if you're bullish crude. It's also kind of rolled over, with what's going on in Ukraine last night with the Danube being bombed, the river being bombed, scared a lot of people, and also gave new moves higher.
I hear about that. Danube River got bombed.
And soybeans kind of leading the way
Mom's
as
a
well.
river.
Soybeans are within 15 cents of their contract high, going back over a year and a half. If we go another 15 cents, it'll be almost a 2-year high. So good moves in the grains. But yeah, I think it's kind of the perfect storm here. We're at quiet time of the year. You got a surprise move in crude. And the last thing, you had a big short bet by the managed funds. They were short corn and they were short Chicago wheat. They're kind of getting beat up on those positions now, so they're going to have to probably cover those.
This wheat move is getting pretty intense and a little bit disconcerting because this is such a specific Ukraine-Russia trade, right? I mean, literally, like the common culture reference of Ukraine is as the breadbasket of Europe, and wheat has been very symbolic of what's happening there in terms of our commodity interpretation.
Yeah, tough is, holy smokes.
Breakout, what's
Tough broke,
on the
VWAP.
table if we get through
10 minutes of
750,
Fugazi
which
coming
we're
up.
really trying to today.
Yeah, 750. You got to remember the funds were short about 70,000 contracts. That's quite a few bushels they need to buy back. But
Thanks, Jay. You
they
too,
just
man.
crushed it. They were short all year. Every time this war's been going for 500 days, and I know it seems obscene, but every time we've had a scare, it's been a selling opportunity. So, it's late in the season. We're actually in mid-harvest. So producers are getting a nice gift here. We're about $1.30 off of our lows.
I see not
But
my name.
I'll say this cautionary tale. Every time we've had a rally, it's lasted about 2, 3, 4 days, and then something changes.
Controlling that
one
new
headline
futures.
away from, there's a new deal, and we're going to start shipping wheat again, and out of the Black Sea, and then we can correct very quickly lower. So it's a cautionary thing. If you want to be bullish, great. You better have a clear path to the exit. But it is an opportunity. It's a great opportunity for farmers because we're coming off a pretty disappointing price slide for the past year.
It's a pretty big move, and possibly kind of the underappreciated mover of the day across markets, in fact, actually, because it could be a pretty big breakout. Nice job keeping tabs on it for us. Thanks, Chris.
Thanks. All right.
You got it. Mr. Robinson joins us from TJM Institutional Services. Let's get our Schwab team in here to start this week, to close this session, and talk about, of course, the major highlight from the central bank, as well as the other big stories on deck for this week. Economic data to earnings. It's all there. It's all on the way.
Oh, that letter that AA sent in the tweet. Yeah, that's pretty funny. It's very appreciated but not expected. Well, that was the whole thing with Ape, wasn't it? I mean, shareholders didn't approve dilution, so he figured out a way to have a spin-off or whatever Ape is to have dilution. That's what this whole thing in the court is about, right? Them suing him for basically diluting without shareholder approval, or trying to. Yeah, I mean, it's crazy. It's crazy what he's done.
For some reason, it wasn't a hike. But I mean, I think he would have to push back pretty hard on the recent loosening in market-based financial conditions indexes, which are very different from certain indexes that the Fed is watching. And he made that, pretty clear about a month ago when he was discussing this and saying, we're not just targeting equity prices or asset prices broadly. So just because they're moving higher, it doesn't mean there's necessarily this inherent risk to inflation itself. So I think from an equity market perspective, definitely earnings season, given such a large chunk of the index this week of the S&P is reporting, and then also the slew of economic data that we've got coming out, personal spending, personal income, and then tied to that, the PCE
5 minutes,
data,
Fugazi.
to us is probably more of a driver of volatility this week, but then as you launch further into the second half of the year too.
Okay, let's come back to earnings. Let's talk about that economic data here for a second, because there is quite a bit on the way, culminating with inflation Friday. More potential for some volatility around the data than perhaps the Fed itself, Kathy?
Yeah, I would agree with Kevin on that, because the Fed is pretty well telegraphed what they're looking at. And so we'll be looking at the forward leading indicators, things like the core PCE and what that means, personal income and spending, what that means. I think one of the other wrinkles that's interesting is we'll be getting the senior loan officers data pretty quickly. I think the Fed probably already
super
has
illiquid today. Little volume.
Get it until after the meeting. So it could be interesting to see just
does look like it's starting to flatten out though, as you see by these trend lines.
Tightening. We know there's a lot in the
It's
pipeline in terms
trying
of
to round out.
credit. That could be a pivotal
30 cents might be the support it holds. 29 rather.
Just the current inflation numbers.
Okay. Kevin, the inflation situation for stocks we've talked about as being kind of a bear case in disguise almost, where the deflation comes alongside lower profits for some of these companies. Where do you think our attention should be focused here in the coming weeks for earnings?
Well, it's not even as much deflation outright. It's actually just the disinflationary process for a company. I mean, deflation is definitely a risk down the road if you go into a more, dire economic situation. But just the disinflation itself, if you were a company or if you were a sector that was heavily dependent and highly reliant on inflation to sort of boost revenues, and you didn't have any actual volume or sales growth, particularly in 2022, which is what we saw kind of at the broader aggregate, corporate America level. Now that inflation is rolling over, you don't have that benefit anymore. And I think one of the problems that we're starting to, unearth for some companies in earnings season is you're having, sort of input cost pressure coming down, which is good, but sort of the offset of that, and maybe more of a negative offset, is higher labor costs that just, haven't had time to readjust. So if your revenue is compressing and you're not able to sort of right size in the labor front, then you're facing a really weak productivity scenario. And, when you look at market performance, that's where a lot of sort of the underperformers have been. So that's why our advice is to sort of shun that part of the market and move towards higher quality areas that have been able to sort of withstand that inflation pressure from a labor perspective.
The inflation numbers on Friday, because when we think about labor, we've been thinking about the wages, and the market seems to have been happy so far with the way wage inflation has gone. Last week's jobless claims kind of gave the bond market a little bit of a whirl. So it does seem like there's some sensitivity, though, maybe building somewhat in the way the market responds to employment data. Am I imagining things, Kathy?
No, I think that's quite clear. You know, Paul has had a list of things he wants to see happen before the Fed pivots, and one of those is to see the labor market loosen up. And the way we're going to know that is when wage growth really slows down. Now, it's slowed down quite a bit, and the ECI numbers should give us a better read on that as well. But it's not yet at a level I think the Fed is comfortable with. I think they'd like to see wage growth closer to 3% than 4%. So clearly, the bond market's going to be pretty sensitive to what happens on the wage front and the employment front.
Okay. Well, they might be relieved to see that the union supplying to UPS Logistics chose not to strike. So there's a lot of that kind of in the air right now. Something to keep an eye on. Thanks, guys, for the thoughts ahead of this week. Great teamwork, Kathy Jones and Kevin Gordon. We got earnings coming up. NXPI is the highlight. We'll see what Whirlpool reports for any insight into the housing trade.
Oh, market's about to close. You're about to be fired. On a Monday? That's not good. What? How'd you not get a bell? Finally worked? Finally not getting audio notifications? Oh, I wasn't paying attention, Cameron. Did he say that? I don't know. AMC loses so much to random expenses like NFTs and distributing popcorn to Walmart. I didn't hear what he said about the UPS. Well, there you have it. Market's closed. SPY's up 0.5%. BBIG, big runner today. 53%. Tupperware, 75%. AMC sold off a bit, but then recovered. And ended the day up 32% from yesterday. Still down quite a bit from the highs, but showing some support. GME's up a bit. Let's see. GME's up 3.8. So not bad. Still hasn't decided a direction to me. Why does that look so different? Oh, I guess it did have a pretty big rally to close there. And now it's at the top of that range. So I'm waiting to see. If we come up and break here with some bullish formation, maybe this inverse head and shoulders plays out, then I think we're in a handle. We've got our cup here, got our handle. Need to see it break here. This is also a 50% retracement. There's also this trend line right here. So it's all converging right here. This doesn't break to the upside, breaks to the downside. We've got this trend line for support, breaks that, and of course we just have our horizontal supports, 19, 15, and on down. Let's see what, and barbecue flat, completely flat on the day. There you go. Still in a downtrend. Looks like it's slowing down though, and maybe starting to flatten out. Gap down this morning. Not sure what the reason for that was. I didn't see any filings or anything. But bounced out of there and flattened out. You can kind of see it's still fighting this downtrend. Like to see it break up here with some good looking formation. Looks like it's setting up another cup. Just cup after cup after cup. Unless we come all the way down to this low, then it's an inverse cup, potentially. Then we'll see if there's a handle, and then that would be quite bearish. But we can, if we come down here and we bounce, and don't make that rejection up here, we should be good. But I don't even think it's really necessarily going to come down this low. Each one of these cups, I mean, you could call them one cup and then a handle and then another handle. However you want to look at it, but each one of them has had a higher low, so that's kind of what it's looking like. So not too sure it's going to come down to 27 or 25 cents. This one was what, 18 cents. This one's 25-cent low. Looks like it's just forming another one with maybe a 30-cent kind of floor. One of these times it might break out, but it might not. The higher these supports become, the more likely they were to break out. Just buyers building liquidity up to bust through there. The last time was false breakout with that little head and shoulders up there, signifying that and the lack of volume. But we could hit here resistance again and just triple top and do another little shallow cup or handle. Yeah, still looking good. Pac West was up a lot today. 8.5%, that's crazy. The trades, so yesterday I did sell some calls. I sold 7 calls on BBIG on those shares we bought last week. So bought shares last week. I don't know, somewhere in this perfect looking escalator. And sold calls on Friday, sold 3.5 strike calls. Right towards the end of the day. Actually I sold them here. Was it here? Somewhere in here. But then it ended up just consolidating into close. I'm like, wow, that's super bullish, especially for a Friday. Yeah, I think I sold them like here. And then it did this second top and just held into the close, which was crazy bullish. No VWAP test or anything. So sold those and still have those, unfortunately. But bought in more shares today on this break of 41. And yeah, now we're sitting, I have 1,200 shares with 700 of them covered with calls at the 3.5 strike for Friday. I might try and roll up. We'll see. But this thing's still looking quite strong. Lot of opportunity for it since it is so early in the week. And on the options today, I closed my run calls. I just had too many calls and I didn't trade them with too much greed. Forgot how to trade calls. You're up just a tiny bit, you hot potato that thing. Don't hold for the moon. Oh, I did close my snap calls. Okay, so close snap calls. These both have earnings and stuff. I opened up a call debit spread on AMC, just a weekly, pretty safe, basically at the money call debit spread for $5 and $5.50. So need to close above $5.50 by Friday. Depending on the chart, I'll potentially just close this tomorrow. If it's up 50 or 60%, probably just close it out, take the risk off. We'll see though. That's a crazy body there on the AMC. Big dojis on both sides. Wow. And then, oh, I did. So I closed my lift calls also. Okay, nice. Lift looks nice. I just, yeah, this one I maybe didn't need to close. I just wanted to take some capital out. What did I sell those for? 69. I think that was like about break even. Too bad because I was up like 30-40% on a lot of these. I just forgot how to trade them. Been a while. Yeah, those are the only ones I closed. Still have some more to close. Still holding Zoom. Where are you, Al? Where's your play? Still holding Zim. I still like both of them. Zoom, we'll see. Neg, tried to close Neg. Again, this one I was up. I did actually short some calls in this one, so I did recoup some profits when it was rallying, but I've closed out a lot more. Blink I'm trying to get out of. And those are all the shorter dated ones. And that's it. Didn't do anything on the theta farm today. Just let it farm, let it eat. If you are a member on there, you see what we're into right now. Don't have a whole lot of positions open on the theta farm. Just haven't seen a whole lot of nice setups that I like. But yeah, they're farming. They're doing good. Might close out of some of them. Probably be able to close out of some of them this week if those stocks stay flat or rally a little bit. BBIG 2% after hours. Interesting. What are they going to say? Time's almost up. Distributing popcorn at a loss. Thanks, Trace. Appreciate it. You're hired. Thanks, Cameron. Thanks, Guts. Yeah, AMC's up 1.2 after hours. Thanks, Blue DJ. Thanks, Christopher. Did we really? Even on a day where barbecue's flat, you guys did 50 freaking likes, man. Well done. I appreciate that. That's awesome. Usually I need barbecue to run at least 6 or 7% to get that kind of like action. So hopefully you guys are doing well and some of this other stuff. BBIG, Tupperware. Tupperware's up crazy. Even AMC. Yeah, a lot of you guys are holding AMC. Yeah, that's smart. Just kidding. Yeah, thanks guys. Have a good afternoon. Have a good evening. We'll see you on Discord. Sub up, like up, comment down. Happy money sticks around. We'll see you tomorrow. Thanks again. Thanks, JT. Look at Tupperware go. Look at that thing.